Good morning, everybody. Welcome back to another episode of The Market Open. It is Wednesday, August 14th, 8:20 a.m. You know what it means if we show up 25 minutes earlier than our regular 8:45 time? It means that in 10 minutes, we get CPI. This is going to be a big one. This is going to be a really, really big one. I am very interested in seeing what we get. This one matters, dude. If this one comes in hot, then market's going to tank. If this one comes in line, maybe market still, feels like it's not making enough progress. If this one comes in a little cold, I think we're good. If this one comes in cold, I mean, it's going to be fun. It's going to be fun because at that point, the rate cut not only gets like definitive, it becomes solidified. Probably not 50 bips, probably more 25 bips, but still we get that rate cut solidified and probably start the trajectory of the next one in December. So this one gives us the ability to hopefully get lower from what we've been at over the past 7 months. The significance of this one as well is that we're looking for a two handle. We are looking for a two handle for the first time. And I think if we get a two handle on CPI for the first time in 2 years, we haven't had a two handle since late 2021 or early 2022, but I think it was, early 2022. So it's been over 2 years since we had a two handle, meaning 2.9, 2.9 and below. And I think it's time. And if we get it today, then it's going to be very, very exciting to see how it plays out. Bay Ray, Martin, Gene, Brendan, Benny, Alex, Kip, I'm Beneficial, Noland, Inez, Peter, thank you all for being here today. Alex, he said, holy shit, I'm on time. Dude, I don't play around when it's CPI day. I don't play around. Now, there was one day around CPI 5 months ago. You guys remember that day where I showed up an hour late? Dude, it was crazy. I felt so bad. And then as soon as I got on the stream, not only am I an hour late, because I started at 8:20, I show up at 9 a.m. It's fucking 3.5%. And so like the market's tanking. I'm late. It was just a horrible, horrible thing. So I got some sleep last night. I'm here. I'm ready to go. And now it's time to see if we get this 2%. Tessa, what's up? Vishal, Ryan, Derry, hello. Amit must have had a nightmare about mayo for the time. I did wake up randomly. I think I woke up at like 6 a.m. this morning, and I was just like, there was a little bit of fear that I was like, oh, did I miss it? Dude, I got a Wall Street Journal notification yesterday. I got a Wall Street Journal notification last night, and the notification started with Japan is set to, and my heart skipped a beat, dude. Because I thought it said Japan is set to raise rates. And I like legit, like I almost collapsed. And then I read it. It was like, Japan is set to elect a new blah, blah, blah. Like, okay, I don't care about that. But I heard the phrasing Japan is set to, and my heart for a second, legit, I was like, did it say raise rates? And then I looked at it again and I was like, okay, no, we're good. I am so on edge, bro, after what has happened with this carry yen trade. We looked at some statistics yesterday that said $15 billion of shorts against the yen, which is borrowing against the yen, went to $1 billion. So 90% of the trade from Goldman Sachs' perspective has been unwound. And I'm on edge, dude, because they can't raise rates. If they raise rates, they're going to mess up everything. So even little things like that, this market is so fragile. We have not had the volatility leave this market, and we're seeing this with implied volatility and with the VIX spiking to 66 over the past couple weeks. Now it's down. It's up a little bit this morning, implying a 1%, 1.2% move in the context of the S&P. So if we get a good CPI, maybe we go up 1%, bad CPI, we go down 1%. But it is a very volatile market. It's not been shaken out. August is choppy, and we still have a lot of time to see before we can definitively say we're back to the bull run. So we'll see how it plays out. We will see how this plays out. Jose, good morning. June, good morning. Thank you, everybody, for being here today. So this is the expectations we have by Mr. Wall Street. Okay, so I'm going out on a limb here. I think it's 2.8, bro. I think it's 2.8. I think all of these guys sandbagged last time, and we came in at 3, and I said it would be 3. I said it would not be 3.1 or 3.2. And now they're saying 3. I think it's 2.8. Most likely, it's probably 2.9 if I had to like really bet on it. I don't think it's 3%. And if it is 3%, then I got something wrong in terms of some of the data I'm looking at, because I think a lot of stuff has declined. Now, one interesting stat, and here's how I could be wrong on this. PPI yesterday, goods went up 0.6%, but services went down 0.1%. And that's what caused the miss on the top on the yearly and the monthly for PPI, which is a really good report. That's markets liked it. But goods did go up, services went down. So maybe if certain goods that are factored into the CPI went up because the PPI went up, and again, PPI producer price index is how much producers are paying for their products that directly impacts the consumer price index, how much consumers are willing to pay. Maybe that leads to like a 2.9 or a 3%, leaves it unchanged. But I still think we're coming in at 2.8. And if we come in at 2.8, again, the expectation is 3. We come in 0.2% below. I think this is going to be a very fun day. Maybe it gets sold off, but if it gets sold off or not, I don't think it matters. What matters to me is that we see the momentum going to the downside. And so we'll see. Maybe 2.8 is a little bit aggressive, but I'm just factoring it on the fact that, well, I mean, for me, oil, which is oil is what? How much of the oil is natural gas, and oil is almost 35% of the CPI. That was down 10% in the entire month of July, and this is July CPI. So I think that should have a profound impact, along with, in general, shelter coming down and a variety of other services coming down. So I don't know. We'll see. Most likely 2.9. If it's 3, the market's probably going to be flat. If it's 2.8, I think we're going to have a lot of fun. So let's see. If we get to 2.7, oh my God, it's going to be amazing, dude. If we get to 2.7, it's great. If we get anything below 2.8, it's incredible. Can you explain the PPI results of yesterday and what it means? Yeah. So again, the PPI is the producer price index. It is how much people are willing to pay to create a product. So if you're selling a water bottle and it costs you more money to get the raw goods, like the plastic, to make that water bottle, you're going to have to eventually, someone's going to have to pay for that, right? Either you're going to lower your profit margins, which is going to hurt earnings, which is bad for shareholders, or you're going to raise your prices, which is bad for consumers, relatively good for shareholders until it doesn't become good for shareholders, a la McDonald's. And then you have to lower your prices. And so this was the PPI from yesterday, month over month, missed by 0.1, core missed by 0.2, year over year missed by 0.2, or missed by 0.1, and then core on the yearly missed by 0.2. This is really good. If PPI comes down, CPI theoretically should come down. And so now we just have to see in 3 minutes. I'm so nervous, dude. I am so nervous. In 3 minutes, what this ends up being. You guys can't even see it, but my legs are shaking. Does anyone shake their legs when they're just sitting down? Like, you guys know what I'm talking about, right? Like, you just, like, your leg just shakes. I've done that since I was little. And my mom gets mad at me because, like, if we're ever sitting anywhere, like, I'm shaking the whole sofa and stuff. Like, I can't help it, dude. I shake my legs. So it'll be released in 3 minutes. 3 minutes. 3 minutes, we get it. You guys do it? Okay, good. It's not only me. Dude, I've done it since I was little, bro. It's like a little workout. Like, it's like your legs are just shaking. This is a sell the news, even if CPI is good. Well, I don't really care what the stock market does. I mean, I hope the stock market reacts to it and it's fun, but the stock market is whatever. We've had a nice recovery since the Japan collapse. I care about inflation coming down. Like, and by the way, CrowdStrike, they got some upgrades today, 250 right now in the pre-market. NVIDIA is up 1%. S&P's basically flat. Palantir, by the way, is up almost 0.5% right here, $30.56. So market's already doing well. Bitcoin up almost 1%, 61,484. If the market sells off, but a rate cut happens, or a good CPI report comes in, then that just means a rate cut is more likely, and that's what really matters versus like the market mooning on these results. Now, granted, I do think that the market initially will show some momentum if we get a very good CPI. But I don't know. Maybe I'm being too aggressive with 2.8, dude. I think it's 2.8. I think it is. I could be wrong, though. I'm probably wrong on this one. It is a bit aggressive. I mean, last time I think it was aggressive too, though. The street was saying 3.2 and I said 3. Or they were saying 3.1 and I said 3. So I was going against consensus there. I kind of feel like they want to sandbag it. Here's the website. We'll refresh. And they want to sandbag it for a reason, because then they can justify to a lot of their clients, hey, well, inflation's coming down. We need to buy equities, blah, blah. But I might be wrong. Oh, boy. Here we go. Yeah, the United Kingdom increased their inflation. So UK is not really going down. UK is going up. Let's see if the US can go down. 2 handles, all that matters. I agree. If we get a 2 handle, then it's going to be important. Oh, my gosh. I'm so nervous. I am so nervous here. This was the last one we got. This is going to be July 24, August 14th. All right, 8:30 a.m. I'm refreshing. Here we go. I am refreshing. This is the last one. This is July. Oh boy. I'm so scared. Oh my gosh. Oh my gosh. What do we got? What do we got? I don't have it yet. Still refreshing. Still refreshing. Nothing yet. August 14th. Do some of you guys have it in the chat? 2.9. It's 2.9. Okay, it's not here yet. It's not here on the website yet, but it looks like it should be 2.9. Here it is. All right. 2.9. 2.9. We got a two handle. We got the two handle. We have the two handle. So 2.8 was a little aggressive, but we are still in the twos. We beat Wall Street expectations. Wall Street, almost every bank said 3%. That's really all that matters. The fact that we beat Wall Street is all that freaking matters, baby. 2.9. Let's go to the markets real quick before we go through the report. Bitcoin is up a little bit on this. Palantir's up 1.3%. CleanSpark up 2%. Google selling off a little bit. Still CrowdStrike up 1%. Airbnb is up a little bit. Is the S&P selling off? The S&P is up. It's kind of flattish though. Robinhood is basically, it's up 1%, but it was kind of at that level before. Tesla's up 1%. TQQQ is up 1%. AMD is up 1%. It's kind of flat. It's kind of flat. Palantir is the only one. Palantir was up like 0.5. Now it's up 1. But outside of that, it's not a crazy reaction. Robinhood just got some momentum there. Now it's up 1.85. QQQ is basically flat. And then where is NVDA? NVIDIA is 2%. NVIDIA seems like the one that's benefiting the most. Where's SoFi? SoFi is up almost 2%. Yeah, I want to be more excited, but this is at least I'm happy we got the two handle, but the market doesn't care. The market really doesn't care. The market does not care. So, it's good, but the market, and that's fine, right? We kind of don't need the market to care right now, but we do need Jerome to give us that rate cut, which is what matters the most. So, all right, let's get into the report. Yeah, so that doesn't matter too much, but we got a two handle, folks. We got a two handle for the first time in 2 years, which matters. So, Consumer Price Index for all consumers increased 0.2% on a seasonally adjusted basis after declining 0.1% in June. Over the last 12 months, all items index increased 2.9% before seasonal adjustment. The index for shelter rose 0.4%. Shelter keeps going up every month. Again, I feel like that data is still lagging, accounting for nearly 90% of the monthly increase. Dude, look at this. Shelter, which for some reason is up 0.4%, is 90% of the reason we got the increase. So it's 1.8% of the reason we got the 0.2% seasonally adjusted increase in the month. The energy index was unchanged over the month after declining in the 2 preceding months. The index for food increased 0.2% as it did in June. The food away from home index rose 0.2%, and the food at home index increased 0.1%. Market will flip to deflation fears. I think that's a real possibility, but right now I still think that two handle is what the Fed cares about, or the 2% target. So until we get closer to that, maybe the market's not going to care too much about that yet. AI, by the way, is only going to make deflation worse because it's going to automate everything. So that's something the market's going to really have to deal with over time. The index for all items less food and energy rose 0.2% in July after rising 0.1% in the preceding month. Okay, so let's look at a few things. Energy, gasoline index was unchanged over the month. Energy was unchanged. The electricity index increased 0.1%. The fuel oil index increased 0.9%. The index for natural gas fell 0.7%. So I was correct that natural gas would fall, which it did. The problem is electricity increased, and then fuel oil index increased as well. So natural gas, we did see take a hit, and that was in general what we thought we would see. But other parts of energy still had that go up, which is why you got an unchanged index, which makes sense. I don't think energy was going to go up. I thought energy was going to go down a little bit. It stayed unchanged. That's fine. If this one went down, we would probably see 2.8 or at least a low 2.9, even if it's still rounded out to 2.9. But that one being unchanged is probably what stopped us from getting into the two handle. The energy index increased 1.1% of the past 12 months. This index for electricity increased 4.9% of the past 12 months. Medical care fell 0.2%. Hospital services fell 1.1%. Motor vehicle insurance index rose 1.2%. That's also not helping. We need car insurance to go down. The index for household furnishing and operations rose 0.3%. Index for used cars fell 2.3%. That's great because it went up 1.5% in June. So it's nice to see used cars come down. Airline fares fell 1.6%. That was obvious. Everyone was traveling, so prices were going to come down. The apparel index decreased by 0.4%, and the new vehicles index declined by 0.2%. All right, not bad, dude. Not bad. Airlines came down. Cars came down. Auto insurance went up, and energy stayed unchanged. And then shelter went up, and shelter was the majority of the reason why inflation came in at 2.9%. Market's selling off a bit. Yeah, Palantir just sold off all of its gains. It was up like 1.4%. Now it's up 0.3%. Robinhood doing a better job maintaining some momentum, but still not where it was a couple minutes ago. Bitcoin 61,021. Yeah, you got a red candle right there. Fell from 61.8 to 61.2. Tesla's now red. Google is red after the Bloomberg article yesterday that the DOJ is thinking of like breaking them up. That's never going to happen, but that was a rumor that came out yesterday. Celsius is up 1%. TQQQ just went red. McDonald's is flat. PayPal is slightly green. AMD is slightly green. Rocket Lab got upgraded to $7 today, but they're up 0.5%. IWM is getting no love, dude. Small caps getting zero love on this report. It hit 211 in the pre-markets, then it just got sold off. Interesting. The market's really not caring about this report, or they're not giving it any momentum. I think maybe we need a 2.8 for the market to really give a crap. And right now they're not. Now, granted, the market's been up this week, and I know it's only Wednesday, but we've had a pretty damn good week. I mean, the S&P was at like 528 on Monday. Now it's at 542. Where were we at? What was Monday? Monday was August 12th. Yeah, literally, dude. We were at 5. We were at 5. Yeah, right there. We were just at 529. And so now we're gapped up to 542. So that's been a great week. Same thing for QQQ. Robinhood right here up 0.6%. SoFi up 1%. NVIDIA up 1.2%. NVIDIA's up almost 12% this week. So it makes sense that NVIDIA's taking a little bit of a breather. But CPI probably did not matter too much. Did I call it PayPal? That's the name of my pal. His name is Paul. That's why I called it PayPal. TNA is up 1.5%. Yeah, but TNA should be up a lot more, dude. If IWM was up more, then TNA would be up more. TNA's gotten hammered too. I think this thing was close to $60 back when IWM was 228, and obviously this one's leveraged, so it went down. All right, so that's our CPI report. Let's get some more updates on that, and then we'll see where that goes. Market doesn't care, which is fine. Market doesn't need to care, but it is interesting. This is the first two handle. I don't want to overlook it in 2 years. It has been a very long time since we had a two handle, so not a. See, let's get some updates on that from CNBC, and then we'll keep going from there.
New York life investments economist and our own Steve Leisman. Steve, you're sitting there. I can see you just squinting at those numbers.
I want to read you something here. Okay, so it looks like a lot of the increase here was an increase in shelter prices. I pointed this out in the prior report that I was watching that. You went from 0.3 to 0.4. I want to double check that number on, I think it was owner's equivalent, right? I want to double check that. So yeah, owner's equivalent went from 0.3 to 0.4. And this represented a big part of the total increases out there. Beneath the surface, it looks kind of disinflationary or I don't want to say deflationary, but other stuff looks very well contained. Energy at 0, food at 0.2. So I'm gonna let the panel take this away, except to point out while Rick
market just went green. Market just went green on this.
May or may not like the government likes Rick because it's reporting that used cars and trucks fell 2.3%, and we know Rick loves his classic cars.
That was expected.
Yeah, but it's just another month in a row. 1.5 down after up in the prior month, 2.3 down. These are big declines. And what's happening, Melissa, the reason it's expected is because the government numbers are catching up with the private sector auction numbers.
Yeah.
Okay, Joe Livornia, I will start with you, sir. I would like you to pretend you're inside the head of Jay Powell right this minute. You're thinking what?
Yeah, I don't know if I want that, Andrew, but a couple of things I just want to add to what Steve was saying is if you look at the Supercore, that was just up 0.21. That's a soft reading. Prior month was slightly negative, but that's a very soft reading at 0.21. And the core CPI, which is broader, That was a 0.17, so it rounded up to 0.2. So these are good numbers that Steve was alluding to. If I'm Jay Powell, I'm cutting 50 in September. That would be consistent with the last 3 cutting cycles where they started with 50 in January of 01, September of 07, and then, of course, the pandemic.
Interesting. So you're not going to 25 basis points. And this is more based on a historical, but that has nothing to do with today's numbers, it sounds like.
No, I think it does, because this will give them the confidence that the inflation numbers are moderating. The labor market is central, as Rick had said earlier. But as long as they're comfortable on inflation, that's going to be a catalyst for 25. If they're worried about the labor market, and the last report was pretty soft, they'll go 50, because the Fed has told us, Jay Powell has told us, that rates are too high relative to neutral. So why are you waiting and just going incrementally? Make a bigger move, and the hope is that you would have to do less easing later.
Can I just point out that the market somewhat disagrees with Joe? I think I agree with his reasoning on that, but it went a little bit more towards a 25 on the probabilities for September. They're very volatile. They may change while we're
because
talking.
if you think inflation is not going to be the problem, then you got to figure out how much of it is really an employment story, and then I don't know where you land there, right? And that's got to be the analysis. Lauren, what do you think?
I completely agree with the trend of what we're discussing, which is that the market narrative has meaningfully shifted in the last couple of weeks away from inflation being the key risk to positioning and towards a broadening and weakness in the labor market being really, really what the market and the Fed are looking for in that difference between 25 and 50 basis points. The Fed told us that they didn't need to see disinflation accelerate. They just needed to see more data in line with what we've seen in the last couple of months. That's what we're seeing today. And so this data point to me points to 25 basis points in September, but consecutive 25 basis point cuts from there. We're looking at an inflationary environment and PPI data yesterday that suggests PCE deflator, which is what the Fed really watches, is likely to move lower. And so I don't think that this points to a need for faster cutting than that 25 basis points. We'll have to look to the labor market report on September 6th to confirm that.
All right, so this is a good report, guys. This is not a bad report. Again, if you're just joining, 2.9 on the headline. Used cars, medical care, airline fares, and apparel went down. Energy was flat. Shelter went up. I think if we can break down shelter and try to get a better understanding of why the heck shelter keeps going up, because what I'm seeing is rents are starting to come down. Well, the obvious reason why shelters are coming up or why shelter theoretically is going up is because mortgage rates are too high and people aren't buying houses. Therefore, prices are going up. You need a lot more demand for prices to come down. And in general, I mean, we saw with Home Depot earnings, right? They missed on their numbers because people aren't shopping at Home Depot as much because they're not refurnishing their house because a lot of people aren't buying houses. So you need rate cuts to re-stimulate the housing environment. And this has been the argument for the past 7 months that if rates are high, the housing sector, rents, et cetera, they're going to stay higher because you just don't have that much demand. However, even with that analysis, shelter is coming down. And we've seen that in the data. We've seen that in rents. We've seen that in property prices. I mean, American homes reached, I think, one of the lowest levels they have in the past 3 months, even though it's still high for the past 3 years. So I don't know necessarily. I got to do some more deep diving on if shelter actually is as bad as the Fed is pointing out to us in this BLS data. But if it is, then that's something that maybe is only solved through a rate cut. Bitcoin right here at 61,000. Inevitably, I think this locks in a rate cut. I mean, dude, we're at 2.9. We are not going to have the federal funds rate at 5.5% when inflation is below 3%. And more importantly, if inflation gets down to 2.7, if it gets to 2.5, then you're going to have more than double the federal funds rate of inflation. Like, that doesn't make any sense. Like, the interest alone that we're paying on that, it is absolute insanity. So I think the Fed had a mandate to get rid of inflation. They are well into that process. And now it's just a simple question of if they can continue that process and keep it going. And if not, then we are going to still be in this narrative of higher for longer until CPI comes down. I think the Fed would rather see inflation come down and maybe get more weakness in the labor market than inflation, not make any progress. Robinhood's up 1.68% in the pre-markets. NVDA is up 2%, dude. So NVDA to me is not even reacting to the to the CPI report. I mean, it's like we're seeing a reaction, but NVIDIA was already at 117 when I woke up. So like NVIDIA is ready to run, dude. Or like it feels like it's ready to run. I mean, if this thing gets back into the 120s, this was at $90 2 weeks ago. It was at, I think, 104 on Friday or something, 105. Or no, it was at $100, and then it topped out at 106, and then got to 110, and then yesterday we got to 116. Now we're at 118. Maybe NVIDIA is just getting really excited for earnings, and the hyperscalers are realizing, or the market's realizing, that the hyperscalers are not spending any less on NVIDIA. And so that's why we're getting some momentum on NVIDIA. Robinhood announces July numbers today after the bell. I'll be live 3:45 at 4:05. We will get those numbers, and we'll see what they end up reporting. I'll give my expectations for those numbers later in the show, but yeah, we'll get those today after the bell. So speaking of NVIDIA, let's listen to a certain someone who's worth $20 billion basically telling you to buy NVIDIA stock without telling you to buy NVIDIA stock. This is the former CEO of Google. Here's his take at a Stanford conversation last night on NVIDIA.
And I'm talking to the big companies, and the big companies are telling me that they need 10 billion, 20 billion, 50 billion, 100 billion.
Stargate is 100 billion, right?
They're very, very hard. Sam Altman is a close friend. He believes that it's going to take about 300 billion, maybe more. I pointed out to him that I'd done the calculation on the amount of energy required. And I then, in the spirit of full disclosure, went to the White House on Friday and told them that we need to become best friends with Canada, because Canada has really nice people, helped invent AI, and lots of hydropower.
Mm-hmm.
Because we as a country do not have enough power to do this. The alternative is to have the Arabs fund it. And I like the Arabs personally. I spent lots of time there, right? But they're not going to adhere to our national security rules, whereas Canada and the US are part of a triumvirate where we all agree on.
So these $100 billion, $300 billion data centers, electricity starts becoming the scarce resource.
And by the way, if you follow this line of reasoning, why did I discuss CUDA and NVIDIA? If $300 billion is all going to go to NVIDIA, you know what to do in the stock market. Okay. That's not a stock recommendation. I'm not a licensed.
So, I mean, it was a funny moment because you got Eric Schmidt, the CEO or the former CEO of Google, who's basically like, hey, if we're going to build out this whole AI thing, not only do we need to be friendly with people that share our values, which as you know, the world progresses, you are seeing other types of values begin to gain momentum across the world. And obviously, you know, the Saudis, the Russians, the Chinese, they don't really believe in the same American or Western values. So Canada is a good friend. Canada has access to lots of energy, and we're going to need an international partner in order to be able to scale the energy needs we have for AI to become reasonable and meaningful. Now, what he said at the end, which is that, hey, if $300 billion just to build out the energy infrastructure is like data centers, basically CapEx, is going to be essentially going to NVIDIA, right? Like a decent, not all 300 billion, but a good chunk of it. Then what do you buy in the stock market? And so it's really interesting because he's not an analyst or anything like that. He's the former CEO of one of the largest companies on the planet. I think he was the CEO of Google for like 10 years. He's also good friends with Karp. He was at the conference in DC. He was on the same panel with Alex Karp, and he really shares Karp's vision around geopolitical ideals and things of that nature. I do think that you take that and you take it seriously, right? Because this is someone who used to work at a hyperscaler who realizes that if he was probably the CEO of another hyperscaler right now, maybe even Google, he wouldn't do anything different. He would keep spending. And so again, the bear case for the Max 7 earnings for Q3 is that they're spending way too much still with little monetization. I think the street might be able to overlook that, or they stop spending and the street gets really scared that AI is not as important as it needs to be. If they keep spending and if they guide that they're going to continue spending, and here's a real indicator that they're not going to stop spending. If they start cutting, like if it's a choice between employees and CapEx, and Google's like, we would rather fire 1,000 employees than spend 1% less on CapEx or 0.5% less on CapEx, that's how you know they are serious about maintaining their AI lead over employees. And it makes sense. Like, do you really need those 1,000 employees if AI is probably going to automate a lot of their work processes? I mean, there's probably people in big tech companies that you could live without. And if you can make a reasonable argument to shareholders that, hey, AI is going to actually just do a lot of the stuff that they're talking about, so we just rather spend on CapEx, that's another way you continue the momentum. and keep it going. So Artist here, dude, why did you send a $200? Thank you, Artist here, for the $200 super chat. I appreciate that. Thank you. You know, Artist here, I was gonna tell a story about you, but now you're gonna make me tell it right now. But I was gonna tell the story a little later. I don't know if you meant to send $19.99, dude. I'll send you back the extra $200 because I have your phone number. So if that was a mistake, please let me know. I will send you back the money. No, Artist here did not lose a bet. There was no bet. What happened with CPI? 2.9%. 2.9. Okay, so because of Artist here's super chat, this brings me into my story. Artist here basically kind of gave away the punchline here with the super chat, but okay, so we talked about the hyperscalers. This actually segues very well. This segues very well into my next topic. We talked about the hyperscalers. We talked about scaling. CPI's at 2.9%. We just looked at Eric Schmidt basically say, hey, buy the shit out of NVIDIA, without saying buy the shit out of NVIDIA, because at the end of the day, NVIDIA is just going to continue to get this CapEx spend. Here's one of the problems with the hyperscalers, okay? Here's one of the major problems with the hyperscalers, and I got to get this off my chest because last night I was upset. I was very, very upset, okay? It's late at night. I come home from the gym, and I have to send a voice note to my friend because I got to talk to them about something. So I record a 33-minute voice note, okay? Now, I know that sounds crazy, but is it really that crazy? Like, I posted this on Twitter last night. People are like, who speaks to their phone for 33 minutes? I'm like, dude, I speak to a camera for fucking 6 hours a day. So, yeah, I can speak to my phone for 33 minutes, especially if I get into a zone. It basically turned into a podcast. I sent my friend, not a fucking voice note, but I spoke for 33 minutes, okay? Then I get to the end of the recording, not in the voice memos, in the voice note. See, all of you guys are saying insane. That's not insane, dude. That's just like, I had to say something. And I press send. I had to press send, dude. And freaking Apple says this attachment is too large to send. And I asked myself for a second, do I live in the Stone Age? Like, do I legit live in the Stone Age right now? Like it's 2024. The attachment is too long. Like I took a screenshot right here. Attachment is too long. Would you like to select a smaller clip from this attachment to send? No, Apple. I would like to send the 33-minute voice note to my friend. Okay. So I don't care about AI. I don't care about Siri, like doing whatever Siri says Apple is going to be super productive or whatever. I just care about basic things working, like being able in 2024 to send a 33-minute voice note, which is what? It's not even a couple gigabytes, right? It's like maybe 200 megabytes, 300 megabytes of storage. Attachment is too long to send. Are you kidding me? So that really pissed me off last night. That really pissed me off. Now, a lot of people underneath the Twitter post that I was getting flamed for pretty badly said, look, man, she's just not that into you. Okay. She's just not that into you. A lot of people said, look, maybe she's just not that into you. I wish I could come up here today and I could say, hey, I was trying to get her to get into me by sending her a 33-minute voice note to confess my feelings. But that's not the case. I was sending it to a guy. So this really doesn't help with this whole narrative that you guys have about me being gay, because sending a 33-minute voice note to a guy is probably like, it's kind of gay. I get it. It's kind of gay. I get it. But nonetheless, I needed to send that voice note last night. And unfortunately, that voice note did not go through. So what did I do to solve this situation? Because I had to solve the situation. I took my phone. I took this fucking mic. I put this phone on this stand, and I left my room for 33 minutes, and I recorded the audio from the phone into the microphone, into OBS, stripped the audio from the video, uploaded it as a YouTube video, and then sent the link to Ardashir, because he's the guy I was sending this 33-minute voice note to. And then I sent him a text. I was like, hey, if you got some time to listen to a podcast, here you go. So this is I don't know why he had to send $200 for that, but yeah, that's how I played it out, dude. It was annoying, dude. It was very annoying last night. Why didn't you call? Because he has a life, he's busy, he has a family. I didn't want to call and take up 33 minutes of his time. So I was like, you know what? Let me just fucking talk for 33 minutes and send the voice recording, and then boom, we're good to go. For those that don't know Ardashir, I mean, a lot of you guys probably don't know him too much. He's not really public on social, but he's a good friend of mine since 2021. I met him over YouTube. He's just like, I've kept up with him for a long time. And so we were catching up, and he was curious about just what's going on in my life. So I decided to send a voice note. Now, I did not know that I would start talking for 33 minutes. Quite frankly, not only does that sound gay, it sounds very narcissistic, because I'm admitting I sent a 33-minute voice note to a guy, And I'm admitting I talked about myself for 33 minutes. So this just looks all around bad for me. But I just hope we can shift the attention from the gayness and narcissism of me to Apple, because how the hell are you not allowed to send a 33-minute voice note in 2024? It is beyond imagination. It is absolutely insane. All of that to say, I don't care how much the hyperscalers spend on AI. At some point, these guys have to figure out how to allow me to do basic things on the iPhone. And if I can't do basic things on the iPhone, then there's just no point of having an iPhone. So yeah, that was my rant about Apple. But thank you, Artshire, for the $200 super chat. you didn't have to send that, but I appreciate it, man. Means the world. Anyway, so that's how I feel about Apple. CPI, if you're just joining, 2.9%, first two handle in over 2 years. Very exciting stuff. Nubank, amazing earnings yesterday, grew 50% year over year, 2.44% down on the day, but incredible earnings from Nubank. Now 105 million customers. So if you care about fintech in Latin America, they did very well. CrowdStrike got upgraded by a couple firms today, 1.9%. Basically, the gist of the firms was that, hey, we don't give a shit about this whole Y2K fiasco. CrowdStrike's going to be fine. They're a leading name, and we think they'll be fine. So CrowdStrike's up on that news. TQQQ is up a little bit. PayPal up 0.25%. AMD up 1.25%. IWM getting a little bit of love. Where's Robinhood? Robinhood right here, 1.3%. Oh, by the way, Robinhood Vlad did an interview with Tannor, if you guys didn't see. So shout out to Tannor. He told me about that a couple weeks ago, and so super excited that he got that interview with Vlad. Again, Vlad just continues to prove that he understands getting attention and being able to engage with independent media outside of Berg and all that stuff, and he's doing it pretty well. So shout out to him. Make sure you guys watch that on his channel, because he's reaching out and he's talking to a lot more people. Alexander says, my GF thinks I'm gay because I listen to you all the time. But like that's not as gay as sending a 33-minute voice note to another guy, So listening to me is different, but I understand why people think I'm gay. Like I wish I could say it was a girl, dude. Now, granted, I feel like it would be worse if it was a girl, because like, who sends a 33-minute voice note to a girl? Like at that point, either you're simping too hard, she's really not that into you, and you're trying to like. I've sent voice notes to girls before, but it's not 33 minutes. I think I maxed out at maybe like 4 or 5 minutes, but like 33 is like it's like typing up a love letter or something. So it's actually better that it's not a girl, because I feel like that would be more demeaning, So it was to a guy who I was catching up with. Just didn't feel like calling. VIX is down 3%. Yes, that is correct. VIX is down 3% again. The CPI report was pretty good, 2.9, and that's why we have VIX coming down right here at 3% in the pre-markets. That's $17 right now in the context of VIX. Troy says it would have been so much worse if it was a girl. Yeah, it obviously would have been so much worse if it was a girl. But I just can't believe that Apple. Didn't let me send it. Kris, I'm calling you right now. Let me get your thoughts on CPI. Let's get Chris's thoughts, and let's see what he has to say about CPI, and then we'll keep going from there. Kris, what's up?
Hello?
Yeah, you hear me?
Yeah, man. Me and the wife are driving to the Outer Banks of North Carolina right now.
Why are you going to North Carolina?
No. We're doing a road trip. We need vacation too, man.
Okay. All right. Well, you both are live on the Market Open. Kris, CPI 2.9%. Are we mooning or not?
I mean, dude, tech is going to catch up. That's why TQQ was probably the best trade to be in for the last 3 days. So I'm enjoying my TQQ run. I'm going to keep at it. I think there's a lot of great companies that have been oversold in the tech side. They're going to rally, and they're going to rally hard. So I would probably not be in the S&P as much as I would be in Qs right now. So.
Kris, someone just said on the chat, don't call Kris, send him a voice note. These.
Yeah.
Okay, so
my wife will tell you I don't listen to any voice notes, dude.
You have voicemails from me from like what 2020 on your phone that you haven't listened to?
No, that's just laziness. Okay, if you don't play the voice, that's just pure laziness at that point.
And then he won't let me delete them. It just doesn't make any sense.
That's insane. What was I going to say? So what do you think about Eric Schmidt saying buy NVIDIA?
I mean, to some degree, he may have some insider information about the total infrastructure play around AI, but I wouldn't trust any of these CEOs. Maybe this is Google cozying up to NVIDIA somehow. I don't know. I don't necessarily think that this is some kind of like foretelling that, oh, you know what, AI is going to be the big thing. Because if you go back to like 2000, there's plenty of people saying that the tech bubble, the tech boom is here to stay. It's always going to be this elevated, and prices don't matter anymore. All that bullshit. So I wouldn't go that route.
Gotcha.
I'd say be objective. Be objective. Don't listen to someone who has a natural, predisposition to a certain industry or a certain trend. Because they're in that trend, they're in that industry. So of course they're going to keep going with that. And I think Eric Schmidt is actually setting up some kind of AI company. No?
Yeah, no, that's a good point, dude. I mean, Eric Schmidt is going to make a crap ton of money if AI. I mean, his Google stock itself is going to go up a lot. So that is something to be fair about. Last question for you, Kris. Shelter went up 0.4%. It's 90% of the reason CPI is at 2.9 versus like 2.7 or 2.8. Do you think the Fed is getting this wrong and they're just looking at the wrong data, or is Shelter legit going up in your opinion?
No. Shelter may be increasing in certain areas, but I think it's just a fluke. Summer, like right now, we're going through the summertime, so there is going to be buying pressure and selling at the same time. So you might see a little bit of elevation in cost, but the longer term trend is that things should be going down. And I think once rates start coming down, there's going to be an unlock of the housing market. So a lot more homes are going to be coming on the market. So one of the things that we have to do right now is kind of like holistically look at the data points. There are certain regions in the U.S. where the prices of homes have actually held up pretty good because there's not a lot of new inventory.
Yeah.
Where other areas have seen a ton of inventory. So if you look at like the Northeast, prices in the Northeast have been able to kind of maintain a little bit and actually grow slightly. But if you go to like the South, like Texas has seen inventory spike to a point where there are actually more homes on the market right now than there were prior to the pandemic. Also, you have to remember there's a lot of home builders that are doing incentive programs to sell new homes. And so this way they can keep the prices higher. And so a lot of these people that are priced out on an interest rate basis, they're taking these homes because these home builders are doing rate buy downs. So a lot of these homes that are on the market, especially the newer ones, they are not going down in price as much. And that might be kind of like distorting the markets. But I think in the longer trend, housing prices are coming down, and we'd have to like look at we'd have to break Shelter down based on rent versus actual like home prices. Because I think from what I saw, rent is starting to kind of moderate and come down.
Gotcha. All right. Thank you for your thoughts, Kris. Appreciate it. And we'll talk to you later. I definitely won't send you a voice note if I want to talk to you. So.
Sounds good. Take care.
All right. Enjoy North Carolina. Bye. Can't believe people don't listen to voice notes, dude. Like, if your best friend sent you a 33-minute voice note, would you actually not listen to it, guys? Because I would. Okay, I'm not gonna lie. I probably wouldn't listen to that shit. Like, I'm just trying to think of it logical. I'm like, would I actually listen to my friend's 33? But this is different. Artist here really wanted like an update on my life, right? So much so to the point where he was paying me $200 for this shit. I want to send you this money back, dude. Like, this is ridiculous saying a $200 super chat. But he actually cared about what was going on in my life. And if you ask me a question, given the verbose guy that I am, good word right there, I'll speak, I'll talk. So I looked down, it was at like 8 minutes. I just kept talking. It was like 15. I was like, all right, I'll stop at 20. It's at 20. I'll stop at 25. It goes to 25. I'm like, fuck it. I'm in a zone. And then it just kept going. I'm like, oh, 33. Okay, he won't mind. He was curious. I'll send him 33. Then Apple's bitch ass is like, this attachment is too large to send. I mean, look at this thing, dude. Look at this notification they sent. This is ridiculous. Attachment is too long. Would you like to select a smaller clip from this attachment to send? And I saw this message, and for a second, I couldn't figure out how to send it. So I was just like, am I going to have to record this again and like do it in different parts? Because I'm not doing that shit, dude. That's insane. Like, I'm not doing that shit. Your boy was creative. I figured it out, recorded through OBS, and I got the job done. But now, to be fair, I do call Kris all the time. I talk to Kris all the time. But Artist here is like, he has kids and stuff. He probably wouldn't be able to talk last night. So I sent a voice note. It is what it is. I sent a voice note. 3 minutes is the cutoff. All right, with me, it's an extra 30. Maybe he sent you 200, so you never send him another voice note. Oh my God, that's hilarious. That's hilarious. Did you listen to it after you sent it? No, I am not that narcissistic to record me for 33 minutes talking about my life and then listen back to what I said as if like I said something so amazing in those 33 minutes to hear back how I sounded. Like, I'm not that crazy. Yes, I did listen back to it. No, I'm just kidding. I didn't. If I did, that would be wild, bro. I would need to be punched in the face if I did. All right, S&P 5,700 by RBC. Let's see why they still remain bullish on this market.
Our next guest says last week's sell-off relieved some pressures in the stock market, but didn't solve its major problems. Here to explain is Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets. Lori, it's always good to see you. We talked the day of the sell-off.
Yeah.
And now with retrospect, you say that a short-term bottom was probably put in place. But what are some of the issues that the market still has to deal with?
So, I was surprised on Friday. We got the CFTC data, which gives you a good read on U.S. equity futures positioning. I think I checked the file 10 times, looked to see what other people were seeing. My data was right. We didn't really see any improvement in futures positioning. So we still look like we're pretty crowded, including in things like NASDAQ futures. I think seasonality is also really treacherous this time of year, and we've got a lot of uncertainty around the election. We've got new economic policies supposedly being dropped later this week. And then I think we're going to come back after Labor Day, and investors are going to be wanting a lot of information from companies about how things are going in the economy, how things are going with consumers. One of the things I remember, just in recent years, companies don't like to give a lot of information that time of year. They really kind of push off and don't like to give a ton of forward guidance. I'm a little bit worried about that as well.
We will, though, get information about the consumer, just not after Labor Day in September. We're getting it now with earnings season, and we will get sort of what could be the lifeline for the AI trade when NVDA reports, because we have been in sort of a data point vacuum since the hyperscalers reported. So couldn't that be enough to sort of get us through that rough period?
I think, it's a question of, have we bottomed? I think 8.5% was enough if we don't have a full-on growth scare, but are we going to have the all clear? And I think in my mind, we can sort of, have that be the low, but still chop around for a bit, not necessarily break new lows. I will say on the AI thesis, I think one thing that was unnoticed in this reporting season is that, not the major mega cap tech companies, but if you look at sort of, your everyday S&P companies who are the end users of AI, there are some pretty good examples of actual use cases, that were being discussed. And I think the street completely ignored that.
Yeah. You like the defensive sectors better in this environment?
I like value sectors better. We've looked at utilities.
It's interesting. Almost every analyst is saying they don't like tech anymore. They like defense, which is consumer staples, healthcare, et cetera. So they still have a 5,700 target. They still have a bull market, but I don't think a lot of them are believing Apple and NVIDIA are going to lead the way. They're thinking it's going to broaden out, maybe not to small caps, but maybe to more defensives.
As an overweight, that one we're still overweight. It's gotten less interesting on valuations, so we're still overweight there. But I would say my attention shifted more to things like financials right now. We're still overweight energy. Obviously, geopolitics are a problem. We always like having that in our back pocket. But the financial valuations have improved, and utilities have gotten a little bit worse. So I might shift from the latter back to financials.
5,700 is your S&P target for the remainder of the year. Sticking by it.
Yes.
What is the rate cut backdrop that needs to happen for you to achieve that?
So, it's funny. Our rate strategists are probably, not looking for as many cuts as some of the others on the street. And in part, they think that's because the economy is going to muddle through. Our modeling, when we went through, and I'll spare you all the details on the model, but we basically felt like if you looked at 55 to 5,600 on the S&P, those kind of highs we had a little above 5,600, that was already baking in, say 3 or 4 cuts from the Fed, some pretty benign inflation data, around 2% on PCE is what we modeled in. So we think, kind of returning to kind of those highs is appropriate, for the rate environment most people are looking for.
So it doesn't really matter what CPI does today.
I hope not. I mean, we'll see. Right. I think I agree with the idea that we've kind of moved away from living and breathing every inflation print. Now we're all focused on labor. There's a lot of confusion over that jobs report that came out a few weeks ago. So I think people are going to be really attuned to the claims going forward. We certainly are as well.
Okay, so I think that's a fair argument. Again, switching to more defensive stocks is not the craziest idea in the world, especially when we just got another Palantir contract, by the way. Let me pull it up. It's a small one, but we got it. Especially when, you think tech might not be able to necessarily lead the way. over the next couple of weeks, or at least the next couple of months, given tech has gone up dramatically. So I think that's fair. I think that's a fair point to make. It's really just a question of which defensive stocks outperform. I mean, look, if we're going to have, well, let me show this Palantir contract. So GoCarp just posted this. We got a $500,000 NIH contract, National Institute of Health. We got it on July 1st. We signed it yesterday, August 13th. It's completed September 27th. So it looks like it's a 3-month contract for $500,000. I think it can go up to $3 million, but we're guaranteed $500,000 of the contract. So there you go. Another deal for Palantir. Again, we got that $8 million Air Force contract last Friday. So another government contract today, $500,000. Again, we did see government revenue reaccelerate last quarter. So we're going to probably get a lot more of these contracts. $500,000, obviously not a big amount of money for the contract, but it is more revenue that's pouring in. And the good thing is it's just more government deals, dude. More government deals, the better. I mean, we got, I don't know if you guys remember, but we got a $19 million deal for 2 years from one of the youngest public health agencies. I forgot the name of the industry. It's like Advanced Research Projects or something. And that was in June. And the reason we got that is because our boy Hirsch Jane, who I got to have dinner with in New York a couple months ago, he leads Palantir's public health division. And he got that fucking deal done, dude. He really worked his ass off to get that deal. So the 19 million is relatively insignificant. What matters is that they went with Palantir, right? And because they went with Palantir, in the future, they're probably going to keep going with Palantir if we do a good job. And we should be able to scale and get more contracts. So that's important in general for Palantir. All right, CPI at 2.9. So I think, if this is a real bear market and tech's not going to lead the way, and there's going to be defensive stocks and there's like an overall bearish thesis, I think we need to find the hay in the needle stack. Because I think if we find the hay in the needle stack, that's really like making it seem like the market could collapse, but no one can really see it, right? It's that hay hiding in the needle stack that we can't really find around this massive collapse that's coming, which some people still believe the market has not bottomed at all, even though we're seeing NVIDIA go from 90 to 118. Then I think we'll be better prepared to deal with a rug pull. Either this is a 2-week rug pull, a 2-week dead cat bounce that gets rug pulled, or if you're waiting for 507 on the S&P, like I said yesterday on the show, maybe you missed the rally for the end of the year. Maybe the S&P doesn't go straight up to like 5,700, even though it's not that far off, like it may be a couple months away if our earnings go really well. But maybe we don't go all the way back down to that August 5th level and then retest it like the Dan Niles of the world say that it could happen. Let me actually pull him up. He was on CNBC yesterday. Let's get his take on where he thinks we are in the markets. But I think it's about finding the hay in the needle stack, because if we can find that and we can have a better understanding of what the hell is going on, maybe we can see some of the stuff that the bears are seeing that they're more excited about in regards to creating a bear case for the market. You guys are saying needle in the haystack. That's not how you say it. It's hay in the needle stack. I think you guys got that wrong. So you need to really check your sources before you say that stuff. All right, here we go. Here's Dan Niles.
Investment management founder and portfolio manager Dan Niles. Dan, it's great to have you back on Overtime. Welcome.
Thanks for having me on.
So let's start right there, the tech rally. We teased it before the break. You said you're getting more conservative. Do you buy into this rally or no, not so much?
Well, it's managing through the risk profile, right? So for us, we put out a post on July 11th and said, you know what, be careful of earnings season, because you've had all this spending on AI, but people now want to start to see some revenues. And what you saw during earnings season was that other than Apple, which is not an AI play right now in the sense of the traditional hyperscalers, Meta, which isn't either, they use AI internally. If you look at the other four that reported, Microsoft, Amazon, Google, Tesla, all the forward numbers went down, every single one. And each one of them was talking about spending a lot of money. And you saw that reaction in the stocks, where if you take the 6 of the Magnificent 7 that reported, the stocks were down 4% the day after. So some of this is just trying to rationalize this. On Monday, last Monday when the market got crushed, we put out that we thought the stocks would bounce in the near term. They have. And I think with this move up, where you've now gotten back all of that carnage from that Monday drop, you got to think through, well, ultimately fundamentals drive stock prices. And when you've got 4 out of the 7 Magnificent 7 that are reported so far taking down numbers, and they're in the AI space, you got to think about that as how much do you want to play this going forward? Because they went down for fundamental reasons, not because of a yen carry trade on.
So before we continue, who agrees with that assessment, right? And the reason I'm sharing Dan Niles is because he's one of the more respected analysts, and he's saying, dude, we're not seeing the bottom until September. And everyone's being uber bullish right now for no reason, because the reason big tech fell was a fundamentally driven reason, not a Japanese carry yen trade reason. So my question to the chat is, do you think he's right? Do you think big tech, when Microsoft fell from 465 to 385, was that fundamentals around Microsoft not being able to justify those numbers? Or was that the Japanese yen carry trade? Which one do you think it is? Because if you believe it's fundamentals, then you kind of can't really believe in this rebound that aggressively. I mean, maybe you buy it, but you're not that sold on the fact that big tech is coming back.
So how does that set us up for NVIDIA later this month?
Well, NVIDIA is a tricky one because we own it. It's one of our bigger positions along with Apple and Meta. And so we have those three. But I think it's going to depend on what the setup is into that print. If analysts are universally bullish and think that, oh, with all of this spending, the numbers are up and to the right forever, that's a problem. And so some of this is going to be how rational are they getting. Now, the good news is we have over the last few days seen some analysts push out numbers because of the delays in their newest chip called Blackwell. Some are thinking through what we've seen with some of the hyperscalers and what they've talked about. Because anytime I hear a company say, well, the biggest risk is underinvesting or underspending versus overspending, that tells me they know that they're spending a lot more than they probably should be.
That is fair. I mean, that's a fair point, right? If you have to justify it in that vocabulary, you probably are spending more than you need to. But it doesn't mean there's not truth to the fact that you do need to spend. It just means you're spending a little bit more than you can theoretically afford to. Obviously, they all have the cash to do it. But if there's no money, no ROI from that, then that's the first thing that gets cut, which is the point he's making.
And don't forget, these hyperscalers were the same companies that caused NVIDIA to negatively pre-announce in the first half of 2022, before we heard of this thing called generative AI and ChatGPT. And investors just, obviously you don't want to spoil a good story, right? NVIDIA stock's done great, got generative AI, but these big companies like Amazon, Google, Microsoft, they do go through digestion periods. And that was pretty clear that they're spending all this money, but the revenues aren't necessarily there, which is why all the forward numbers go down. And at some point, they're going to go, you know what, we need to digest some of this spend.
So what are your thoughts then on Alphabet specifically? They had this Google event, launched its first AI-powered Android update. We've got the new Pixel 9 phones. I realize hardware is not typically the thing that moves Alphabet stock, but AI was a big part of the talking points and the messaging today.
Well, you have to ask yourself one simple question, Morgan, which is, do you think all this money spent on AI by the likes of Microsoft and OpenAI will affect Google's over 90% share in search? If your answer to that is yes, then from a longer term perspective, Google's got an issue. And it was troubling to me that they had a problem with their YouTube business and Meta was absolutely fine.
They didn't have a problem with the YouTube business. They missed on some numbers. That is very insignificant, in my opinion. Like, to say they had a problem is a bit of a stretch, but they missed on some of their numbers. I don't think, lack of AI monetization is the reason for that.
So I don't like Google. We're short it in full disclosure. And, and I like that match of versus a Meta, where Meta's using AI to help recommend videos that you want to watch, and then using AI to help show the ads that are engaging. And they didn't have any problems whatsoever. And so I think that's a pretty good pair in that sense.
Shorting Google is interesting, dude. Shorting Google is very interesting. I mean, let's segue into the conversation around Google. A lot of you in the chat think it's more Japanese yen carry trade versus fundamentals. I'm a bit of both. So I think the yen carry trade obviously led to people selling off big tech. That's obvious, especially if you were borrowing against it and you got margin called. A lot of people got margin called on Monday, dude, and they had to get the money right to maintain their maintenance on their accounts. But I do think that some of these companies were getting aggressively valued. Like Microsoft, I don't think had any business being at 465. Apple, no business being near 240 before the iPhone launch. Like, that's just like, I think the market's really baking in way too much there. So obviously, I think some of the fundamentals were mismatched with the reality of what was going on. And I think it was a very healthy correction. But I also think a company like Meta that goes down to 440 deserves to go back up to 520. So some of the names I think didn't have the growth to justify it. Other names did. Shorting Google, I don't know if that's the strategy, dude. So now getting into Google, Google had their event yesterday. And the big takeaway from the event was this Pixel 9. It was a foldable phone powered by AI, 16 gigabytes of RAM, and all of the good Google Gemini stuff, G4 chip. You have multi-view on YouTube TV, lots of stuff. They showed a bunch of demos on how you can like talk to your calendar and you can show it a picture and it uses AI to transcribe everything and give you details. Like they showed a bunch of different things inside of this. New Pixel camera, new Pixel watch, all this stuff. It was a good event. It was exciting. The problem is, as soon as they announced this stuff, a little bit later, Bloomberg comes out with an article that says, hey, the DOJ is considering breaking up Google. Now, I believe there's no way that Google is going to get broken up. If they do, I am buying YouTube stock like tomorrow if that happens, because like that, I think that would be one of the coolest companies to own and probably one of the more undervalued companies over time, just given, I mean, if you just look at YouTube at a high level, there's about 2 billion people using it. There's 4 billion people that have yet to come online. All of those people are going to be online probably in the next 15 years, if not the next 10 years, especially if Starlink starts to scale dramatically. And this is a bull case for Facebook and Meta as well. It's just, I think YouTube has a better moat than those platforms because it's like video and everyone watches video. All those 4 billion people are going to have Android phones, not iPhones. What comes pre-installed on Android? YouTube. Where are they going to go to get their videos? YouTube. You know, for Facebook, you have to be connected with your friends. So everyone around you needs to have Facebook. On YouTube, you just need to like search for something and a video pops up. So YouTube is like one of the world's greatest inventions. Google got away with getting it for $1 billion. Now it's probably worth, I think, 500 to 700 billion independently. So if it was an individual stock, I think you could go long on that, even if it IPO'd at 700 billion, which would be the craziest IPO ever. But I don't think the street's actually going to break them up. I don't think there's going to be a way to do that. I think Google is just way too big and Lena Khan is not going to be able to get that done. But that's why you're seeing pressure on Google stock. Now, is that a reason to short it? Not in my opinion. S&P, by the way, up a little bit right here, up 0.16%. I think it's a tough sell if you're going to short Google at that level. The other argument to short Google down 1.25%, even on a good CPI report, so the market's obviously a little afraid of Google right now, is that search is going to take away, or LLMs are going to take away their search monetization. I bought into this argument in February. I realized this is a stupid argument in March. And I think most people realize like search is not going to die anytime soon. Maybe it's not as significant as it is right now, but I think Google figures out how to monetize on the back end. I've been using ChatGPT a lot. And yesterday I actually used it to get sources. So like I typed in a question, it gave me the answer and I legit clicked on the source because I wanted to verify, which means ChatGPT sent traffic to a website via a query. And that's the first time I like actually used ChatGPT to find what content on the internet. Whereas on Google, you know, you would have to go through the 10 blue links, but now Google's giving you that overview immediately and then giving you the link. So I still think they're going to find a way to monetize it in a meaningful way. So Google being under pressure right now, I think more has to do with the fact that they barely beat on their expectations for cloud and for search last quarter. I don't think it's the DOJ breaking them up or LLMs taking away search revenue. So short Google is very interesting to me, but his broader thesis about tech is that NVIDIA is the one you can go long on unless the hyperscalers say they're not spending money. It just seems like with NVIDIA going from $90 on August 5th to $118 right now in the pre-markets, the market believes hyperscalers are going to keep spending. And if they do, we'll see momentum. I mean, we even saw, what's his name? Zucks and Jensen, right? In that conference they did. And Zucks basically saying, hey, you know, we're a great customer. We spend a lot of money. And we spend a lot of money for a reason. So that's what you have in the context of Google. Amit, do a poll here. Who owns iPhone versus Android? That's a good idea. So let's do this poll. I'm actually curious about this. I'm going to guess 60%. Damn, I want to say 60% iPhone, but I don't know. This is a hard one. My heart's telling me Android. My brain's telling me iPhone. So my prediction is 60-40 iPhone. 60-40 iPhone or Android. But my heart's telling me Android. My brain's telling me Android. My heart's telling me iPhone. So iPhone or Android. All right, polls up. My heart's telling me iPhone should win. My brain's telling me Android. Why is my brain telling me that? Because more of you are international. And I just think in general, international, we have more Android presence than in the United States. But it's almost 50-50. Wow, it's almost 50-50. So 270 votes, 56% say iPhone, 44% Android. Okay, so my heart was right on this so far, not my brain. It looks like iPhone's winning. I've had an iPhone since I was 13. I made a PowerPoint presentation to my mom and dad on getting me an iPhone when I was young, and I convinced them. And I got a 3GS, that first iPhone. Then I got the iPhone 4. And I was like I have voice notes, not voice notes. I'm saying voice notes. I have like notes on my phone from 2010. Like I legit have had an iPhone my whole life. I can't imagine using an Android. I have no hate against Android. I've just used iPhone forever. So yeah, literally, dude, like notes from 2010 on my phone. So I've just had this phone for so long that it's hard for me to imagine not having this phone. Yeah, dude, look at this. Look at this. You guys want to see something? Look at this. Here's a note on my phone on October 27, 2010, which is when I got the iPhone. I got an iPhone 4. You see that? Does the camera pick it up? Right there. I got an iPhone 4, October 27, 2010. I put 4 exclamation words. Like I was so excited. So I've just had an iPhone my whole life. And if I've had an iPhone my whole life, it's hard to go to Amazon. Or not Amazon, Android. Now, the poll, we're at 56-44. Yeah, still basically 60-40 iPhone, Android. That's what I thought. Okay, so speaking of AI, let's listen to Bank of America's report on the AI bubble. So they put out this note this morning. Let's see what they have to say. The third major tech cycle of the past 50 years has begun. We wrote in our inaugural AI report that Gen AI may catalyze an evolution in corporate efficiency that occurs faster than past disruptive technologies and investors anticipate, but we fine-tuned our views and think the evolution could become a revolution. Very bullish note by Bank of America on AI. Despite AI capex potentially reaching $1 trillion in the near term, we're only in 1996 relative to the internet. Generative AI apps are the foundation models that power them have advanced rapidly in the past 18 months. But over the next 10 years, we expect Gen AI to transform the global economy as well as our lives. Gen AI already has the intelligence of a college graduate, but will likely put a polymath in every pocket within the next few years. Pretty incredible, right? So beneficiaries, what they say about NVIDIA is that it's just the tip of the iceberg. Skeptics declare that AI's reality doesn't justify the hype or the infrastructure investment, but investors often overestimate the magnitude of tech disruption in the near term and underestimate it over the long term. And that's just true. I mean, the internet seemed like a fad in 2000, but the internet changed everything, dude. Like it gave us the global economy that we have today. Like every single part of the economy is contingent upon access to the World Wide Web. So if that's what AI becomes at a level that's, 10x bigger than the internet, which is what Jensen thinks, then, the money that's going to be made off this is going to be phenomenal. We expect relatively short time gaps between AI infrastructure investment and monetization, given powerful foundational model. Operating systems are a prerequisite for revenue generating apps. By the way, this means the enterprise is going to unlock trillions of dollars of value. That is why Palantir is at $30, because even though it's expensive, the street doesn't care if they think AI is going to be bigger than the internet. We have only just begun to see AI startups that may capture market share from the significantly larger services industry as unscalable businesses are transformed into software products. So, I mean, Bank of America is pretty damn bullish, dude. And they think AI is just getting started. If you believe AI is just getting started, then you probably think that, AI, that the investments made in AI are not going anywhere. Serve Robotics in the pre-market is up 34%. This is another AI name. There's going to be a lot of these names that have been tapped by NVIDIA, gotten an investment here and there, are, perceived as important when it comes to energy, et cetera. Oh, and energy, I mean, again, we talked about it. Trump talked about it in the Twitter spaces, but it's not really a political thing. It's just objectively true. Eric Schmidt talked about it today. We are going to need so much energy. I mean, think about how much energy we need just to power the modern internet, right? How much energy we use just to hook up to our Wi-Fi. In basically every modern part of the developed world has a Wi-Fi router in their buildings. Like there's so much energy required to make this happen. If AI requires more compute, we're going to need more energy. So long AI, long energy, if you believe in that thesis. And we got to see use cases for that thesis to occur. Unfortunately, the use case is not being able to send 33-minute voice notes on the iPhone yet. But once we see those real use cases and Apple democratizes it to billions of people, then I think we're going to see even more momentum in the coming decade. So Bank of America is bullish on AI, and I guess we'll see how big it actually gets over the long term. The poll, I'm going to end the poll right now, but it's basically 60-40 iPhone, Android. That's what I felt would be the case. I had a little bit of an inclination, maybe Android wins because across the world, Android's popular, but makes sense that more people have an iPhone. And I don't think an iPhone's necessarily better than an Android. I just think people got hooked on it a long time ago. And now if you're hooked on it, it's hard to switch. So that's why people like the iPhone. All right, here we go. It's 9:30, Wednesday, August 14th. Ladies and gentlemen, the stock market is once again open. Wake your ass up. CPI came in at 2.9. If you're just joining, we got those results about an hour ago, and that's the first two handle we've seen in over 2 years on CPI. Palantir opens up 1%, $30.71. We opened a red yesterday, and then we ran all the way up into the high 30s. Let's see if we can get 31 today, and if the momentum can continue. Robinhood up 2.23% on the day, $18.83. TNA, triple leverage IWM fund that's at 38.17. That's up about 1%. Google is down about 1%. Serve Robotics up 37% in the pre-markets. TQQQ $64.25. NVDA 1.8%. Now at $118. Absolutely incredible for NVIDIA. Robinhood right here up 2.2%, catching a bit of a bid right here. 1882 just was at 1889, now at 1882. Palantir $30.77. CleanSpark up 2.5%. CrowdStrike 250. Airbnb 118. Home Depot at 350. They're green from yesterday. Bitcoin is slightly down. It was at 61 this morning. Now it's at 60,000. Tesla is up 208. Tesla was up 5% yesterday. Celsius is 39.60. United Health 576. One of the more defensive names. PayPal 65.24, AMD 142, IWM 0.27, Eli Lilly 908. This was 960, went down to 750, now back at 909. So not doing too bad. Microsoft's at 416. Let's look at the Mag 7. Apple slightly down. Microsoft's up. Meta's up at 530. Meta's basically making 52-week highs, dude. Meta's just incredible. Just absolutely incredible, dude. Amazon at 171, NVIDIA 118, Tesla down just a little bit now, and then Google right here at 164 on the day. Crypto stocks pretty much all green. Bitcoin slightly green. Ethereum at 2,700. Coinbase at 199 on the day. Semiconductor names. So most of the semis are green. Most of these semis are green. So we've got SMCI at 579. That's up 2%. SMCI was at 478. Now it's at 579. So if you bought the dip on that, congrats. Intel's at $20. They're down on the day. AMD at 142. NVIDIA 117. ARM is up 5% on the day. Marvell is up 0.69%. Dell is above 100. Dude, Dell bottomed. Where did Dell bottom? Dell bottomed at 86 on August 8th. 86. So we definitely saw a nice rebound from Dell. Bank of America, I think, put out a price target of like 150 or something. So the banks are still bullish on it because they think operating margins will go up. Right now, operating margins are 0%. If that goes to, even 10% or 5%, that'll be bullish. Micron Technologies 3.48%. That's at $180. That's at $100.85 right now as well. Adobe is up. Wow, Adobe up 1%. Look at that. Look at Adobe, 541. Where's Palantir? Palantir, $30.75. Let me pull up resistance on Palantir in the book flow. Let's see what we've got going on with Palantir. We've got $31. Yeah, there's not a lot of resistance. The next level of major resistance is at $31.50. We've got about 20,000 shares. Going until 31, there's nothing. Oh, sorry, I missed it. At $30.80, there's 27,000 shares, which we just broke through. As I say, the resistance, we just broke through that level. So at $30.80, there were 27,000 shares. Those just got gobbled up. I mean, those were eaten up pretty quickly. Now we're at $30.92. And the run to 31 should not be that hard if we get some momentum. The run to 31 should not be too hard if we get the momentum. Shout out to Craig. Thank you for the super chat. He's saying one of the notes I put into my into my notes was that May 2016. I am today, but confused about if I want a boyfriend or girlfriend. It's funny because in May 2016, I was a senior in high school and I actually did have a girlfriend. So May 2016 was like prom. Yeah, that was high school prom, senior year prom. So I wasn't too confused in May 2016. Maybe now that I'm sending 33-minute voice notes to guys, I'm more confused. But in 2016, I was good. Robinhood right here at 1870. SoFi at 674. Again, we get the Robinhood metrics after the bell today. So we'll see how the street thinks of the July numbers. We'll talk more about Robinhood in a little bit, but I think the numbers should go well. Palantir at 30.93. We should make it to 31, dude. There's really nothing stopping us. There's not a lot of sell side pressure from what I'm looking at. Volume is 4 million, which is great. That's like very strong volume within the first 5 minutes of the open. So I think we should get some momentum. MK says, Amit, I just caught up. Did you send a 33-minute voice note to a dude? Yes, I did. It is what it is, dude. I did. And we discussed that it would have been worse if I sent it to a girl. So actually, I think that's not the worst thing in the world. SoFi up 1.2%. CleanSpark up 1%. CrowdStrike 249. Again, they got upgraded this morning by a couple of banks. And we're still trying to see Palantir crack to 31. It's at 30.87. For those that are just joining, we did get 2 deals over the past couple of days for Palantir. Yesterday, we got a deal with Surf Air Mobility, building their platform OS on top of Palantir. Good deal. Not a lot of money from that deal, but still a good partnership. And then today we got a $500,000 contract from the NIH. So again, small amount of money, but good to get more government contracts. Probably nothing that's going to move the stock. The CPI report most likely moving the stock today, but still doing okay. Let me look at SaaS names. SaaS is reddish, greenish. Snowflake down. Datadog down. Confluent down. Salesforce is up. Twilio down. Intuit down. GitLab down. And the rest of these names are slightly green. Dude, out of all these names, Palantir is really the only one that I think of when it comes to AI. Like Oracle, because they have cloud AI. Salesforce, I don't think really has much AI or any. Oh, 30.99. 30. And maybe that's why Palantir is in the high 30s, because it's able to tell the street, hey, we are an AI name. But Adobe's probably the next one that I think of AI. 31. There you go. 31 on Palantir. We got 31. There you go. And Adobe, because they do a lot of generative stuff with the creative Photoshop and all of that jazz. But outside of that, I think Palantir is one of the core SaaS AI names. So there you go. We got 31. Let's see if we can get, there we go. 31.02. All right. We just tested it twice. Now back at 31. The bids are coming in for 31. The bids are coming in. The next big wall on Palantir after 31 is 31.50. I don't even think that's a wall, though. It's like 13,000 shares. That's not really that hard to get through. The street looks like it wants to go higher, dude. The momentum's building. I'm going to do a video today on the media effect on Palantir. So watch out for that daily Palantir episode. It's going to be an entire episode around what it means for the media to have a constructive relationship with Palantir and what that means for the stock as investors. So I'm going to deep dive into that later today, and I'll put that out. But I just think more and more media is covering this company, and more people are getting interested about the name. Amid, at what price of Palantir will you cry on stream? I don't know, dude. I'm going to be holding this for a long time. So let's see. Maybe 300, maybe a 10x from here. That'd be crazy. And that would be like 300 would be like a $650 billion market cap. Like, I just want to let you guys need to remember, the street is pricing in 30% year-over-year growth at this price. Remember, the way a stock is reflected is in future growth always, right? So this $30, $31 price that we're looking at, the street is pricing in at least, I think it's actually 35%, but at least 30% growth over the next decade, which would imply close to $24 billion of revenue by 2035, which sounds crazy to say right now, but Salesforce, is doing 40 billion in revenue because they've been able to grow. So it's an aggressive price, dude. And it's aggressive. It's an aggressive assumption by the street. However, that's the point of being an investor, right? You buy into a vision. If you think that's going to happen, you buy the stock. If you don't think that's going to happen, you don't buy the stock. And even if that doesn't happen, I think there's still a premium attached to it, even if it doesn't get to that like crazy growth. But the street definitely wants 30% growth, and we need to get there by the end of the year. Right now we're at 27%, so I think we're going to get there. And I think the street's going to be very excited if that ends up playing out. NVIDIA, what price is NVIDIA at? 116. Okay, NVIDIA's dumping right now. NVIDIA was at Robin at 1885. NVIDIA was at 118. Now it's at 117. So it's still up 1%. It was up 2.4%. So we're getting a little bit of a red candle on NVIDIA. Yeah, there you go. That's the red candle showing right there. But still green on the day. TQQQ 63.79. That's up in general. The QQQ, the NASDAQ should be doing well. Yeah, 463. And then the SPY is up. It's flat, but it's up. Still green. Rocket Lab got upgraded today, so they should be doing well. Rocket Lab 534 up 2%. Yeah, I forgot who upgraded them, but they got upgraded to $7. So that's been good for Rock Lab. Couple of headlines for you guys. So Norges Bank, the central bank of Norway, they disclosed today they own 1.1 million shares of MicroStrategy. So they are betting on Bitcoin through MicroStrategy. Starbucks down 2%, relatively insignificant. It was up 20% yesterday. Even if it goes down 5%, still not a big deal. But if you bought Starbucks in the 70s, you're doing pretty well. CMG Chipotle is up a little bit, catching a bit of a bid after falling 10%. And then MicroStrategy is at 134. That's basically down 1% on the day. Another headline, Goldman Sachs owns $418 million in Bitcoin ETFs. So they own 2.8 trillion in assets in general. They disclosed yesterday they own 418 million of Bitcoin ETFs, spot ETFs. So it seems like Goldman Sachs has built up a $500 million position, which is a decent amount for them in the context of the Bitcoin ETFs. Pounds are getting rejected at 31, now at $30.74. There's still too many sellers at 31, which, like, I get it. I understand why, but it's still not enough. We've cracked 31 3 times and we haven't been able to like stay above it. And that's probably because there's still too many people willing to sell at that level. United Kingdom inflation rose to 2.2% year over year. Previous was 2%. The estimates were 2.3. So it beat the estimates because it was 0.1% below the estimates, but it was 0.2% above what it was previously. We, not only the United States, beat the estimates of 3%. We came in at 2.9, but we also came in below previous month, which was 3%, which was really good for the United States as well. S&P flat on the day, pound to 30.65, starting to see it go down a little bit. Robinhood 1883 still holding up that 1880 level, so not bad on Robinhood. S&P at 542. NVIDIA just about to go red. Yeah, NVIDIA goes red. NVIDIA goes red. So people sold off NVIDIA. I mean, look, it's up almost. NVIDIA added $400 billion in market cap in the past 3 days. So I guess people can definitely take their profits there, but not holding up on the momentum today. TSM is down 1.6%. Yeah, most of the semis will go red now. Yeah, most of the semis are going red. Most of them pretty much going red. AMD just went red. SMCI just went red. Dude, NVIDIA controls everything. Like, NVIDIA controls, like, how do you think it feels to be Jensen Huang? Dude, literally, like, at some point you would have to, like, not even realize you have that much pressure because, like, his stock, his company controls everything that happens in the market for the most part. Like, if NVIDIA tanks on earnings, dude, the S&P and the QQQ are not going to hold up. And I think if they give a good earnings and they tank, the blow won't be that bad. But I think, make no mistake about it, if we tank, then it'll be bad, right, for the broader market, at least for a short period of time. And if we do well, but we still don't tank, I think the blow will be a little bit okay. If we do really well, then I think we propel the market back at least closer to that 550 level. July was the 565 top on the S&P, 500 on the QQQ. Maybe we get to like 480 on the Qs, and then a rate cut hopefully propels us further. Hopefully it's not NVIDIA crushes, we moon, and then we sell off on the rate cut, and then the election happens, and so we sell off even more. And then November, December, we kind of just go flat. Like, that would be the worst way to end the year. I don't think that's going to happen. I think there's just too much momentum, and there's too many macro factors that'll help it. So I do think there'll be volatility, but I think ultimately it still goes okay. Pound you're at $30.47 now. Jensen's been selling. I bet he feels great. Now, granted, although Jensen has sold like a couple $1 billion worth of stock, it is still just 0.25% of his overall holdings. He still is worth like $80 billion, which is crazy, bro. That's like legit crazy. So although he's been taking massive profits, it's still such an, like, people say Elon's going to be the first trillionaire. I mean, dude, if Jensen keeps this thing going, if Bank of America is correct that NVIDIA just gets all of the CapEx spend, maybe Jensen beats him to that trillionaire status because he still owns so much of NVIDIA. Let's do that poll in the chat because I saw this poll on Twitter yesterday. I thought this was a good poll. Okay, so who's the first? Actually, no, so I was going to say who's the first trillionaire, but the better question, which defines the answer to that question, is which company is bigger in 10 years by market cap? Because if you believe it's Jensen, if it's NVIDIA, then Jensen's probably the first trillionaire. If you believe it's Tesla, then Elon's probably the first trillionaire. but curious what you think. What's going on? Why is everything dropping? Typical sell the news on CPI. This tends to happen all the time. I think, we could probably get a reversal later in the day, but this is what happens. CPI would have to come in at 2.8, I feel like, and really beat expectations for the market to get so excited to not sell it off 20 minutes into the open. But this pretty much happens every time, dude. I don't remember a CPI report where we didn't sell off right after the report. Like last time, dude, we mooned for like a good 5 minutes in the pre-market, and then boom, at like 8:55, we just like fell, and then the market was red when it opened. But it was a good CPI report. That was the point. It was a good CPI, target at 136, and you need a good CPI to get through a lot of the solidification for a rate cut. First trillionaires between Roaring Kitty and Sir Jackalot. Dude, Roaring Kitty, dude, that guy's, he's just left everyone. It's so sad, dude. He came, showed up, and just left. Just didn't really care that much to keep staying. And a lot of people got roped into GameStop, dude. A lot of people. And they're waiting for this guy to make a comeback. And I don't even know if he's still in GameStop. The top performers from the low on Monday's 8.5 destruction. You'll see it right here in the chat. So S&P gained 6%, Google gained 6%, Microsoft 7%, NASDAQ 9%, Netflix 10%, Amazon 12%, Apple 13%, Tesla 14%, Nikkei Index 16%, Meta 18%, and then NVIDIA 28%. TSM was the biggest one. So NVIDIA and TSM really rebounded the highest after the 8.5 collapse. Then it was Meta, then it was the Nikkei, then Tesla, and then the lowest was the S&P, which makes sense because the S&P is an index and it should be the lowest. But overall, like we've seen to have a pretty decent recovery from that collapse. Okay, the poll, 60% of you guys say Tesla, 40% of you guys say NVIDIA. Interesting. So 60% say Tesla, 40% say NVIDIA. Dude, I would have to agree. I would have to agree. Again, this is one of those things where my brain says NVIDIA because they're at the epicenter of getting all of the demand from the hyperscalers. And if you believe the Bank of America note we said this morning, the hyperscalers are going to keep spending. So it's very predictable revenue. Tesla has way more unknowns. We don't know if FSD is really going to work. And we don't know if humanoid robots are really going to work either. But if they work, which it's a bet on Elon to make it work over the next 10 years, I can't imagine Tesla being below, $3-4 trillion. If they really work, like, again, they've really got to work. Like you've got to bet that humanoid robotics really scales and that Elon really figures out FSD and, it replaces Uber and all that shit. Like you got to believe in that thesis. But if it does, I think the GPUs don't matter as much anymore after you've trained your models. Now it matters the applications of those AI models, which would be LLMs and robotics, or FSD and robotics. So I would go Tesla, but I do think in the short term, NVIDIA is just going to get so much spend that they probably have some more short-term momentum. Palantir at 30.55 right now. Google really getting hammered, down 2% on a good CPI day, because of that Bloomberg article, because of that antitrust stuff, which we know we know Google's not getting broken up. We know Google is way too powerful. So it's so weird when the market, it's what the market does, but it's not like a fun, there's no way Google is going to become YouTube and Google Cloud separately. Because if they do that for Google, they have to do that for everybody. And they're not going to break out WhatsApp from Meta. They're not going to break out AWS from Amazon. It's just not going to happen. So I really doubt that would be the case. Grok 2 is officially out. So this is Elon's new model from XAI. I have not played with it too much. I'll probably play with it later and give you guys my thoughts on it. I've used ChatGPT a lot, and ChatGPT has been good even at creating models as well, or creating pictures as well. Maybe we do it right now. I have Grok. Let's see. Someone give me a prompt to put into Grok to make a picture. Someone give me a prompt and I'll put it in Grok and we'll see what it gives out. Admittedly, ChatGPT has been way better for me than a lot of other models. So that's the one I mainly use, even though I'm on Twitter all day. So I think Grok has a distribution advantage. They just have to make the results better and then you'll get more people using it. But right now, still GPT is better for me. Rumble is up a little bit. Where's Rumble? Rumble had earnings on Monday. They're basically flat on the day. $6 earnings. We're not that impressive. It was up a little bit on earnings. Bitcoin is tanking right now. So we went from 61 down to barely 60. So that's coming down. Celsius is at $40. That's gaining that 40 momentum back. Uber's up a little bit. Uber and Lyft, these guys, again, if the narrative on 1010 is that robotaxis are taking over the world, the future growth of Uber and Lyft might be capped, which the market punishes them for. So that's one that we have to think about as well if you're long those names. Although I don't think Uber and Lyft are going anywhere. even if FSD is successful on 1010. I think it's going to take a lot of time to dethrone them, but maybe that perception hurts them in the short term. Rocket Lab up 1.6%. S&P just went red. Starbucks down 2%. Palantir 30.52. That's up 0.5% on the day. Hay in the needle stack. That's a good one, dude. That's a good. Let's do that one. Let's do that one. Hay in the needle stack. Let's see. Let's see. Show me a picture of a hay in a needle stack. Let's see. Let's see. Let's see. Let's see. Wow. However, visualizing a hay in a needle stack is quite an interesting twist on the usual needle in a haystack phrase, isn't it? Imaginative. No. Show me the picture anyway. Let's see what it sums up with. I wish I could, but I'm not currently set up to display images. Okay, so either I'm not upgraded on the right Grok. Maybe that's it. Grok. Oh, it's in beta. Fast and capable model. I'm in beta. Okay, let me see. Show me a picture of a chocolate cake. Let me do an easy one. Let's see if it can do that. Maybe it'll do that. Okay, so maybe really tough queries it can't handle, like hay in the needle stack. I don't know why that's so tough. That's a pretty basic saying that a lot of people say. Chocolate cake is much easier for it to understand. Let's see. Let's see if we get an image. I don't blame it if it's too slow right now. These models are pretty tough and they'll get better over time. But a bull wearing a Palantir hat. See, this is where Twitter can excel because Twitter has so much content around Palantir that they should be able to easily find the Palantir logo. I mean, for goodness sakes, people have literally posted pictures of themselves wearing a Palantir hat. So it shouldn't be hard for them to figure out how to use that and mix it with their models and then come up with a bull wearing a Palantir hat. And ChatGPT doesn't have access to that content. ChatGPT doesn't have access to millions of people posting Palantir tweets all day so that it can inference all that data. That's where I think Grok has real-time advantages, but it's just not as good of a model yet. Yeah, it's not going to display me that image. So I guess for some people it's working, but for other people, Grok 2 is not fully set up yet. Once I get it and I should have it though. I pay for premium. I pay like $30 a month for Twitter. So I don't know why I'm not one of the first users on this, but I'll show you guys once I officially get it. Thoughts on how much impact the Fed numbers, rate cuts, etc. will have on Palantir over the next 2 years? I think if we get rate cuts, Palantir is going to do very well. Palantir has no debt. They have $4 billion in cash. Rate cuts, I mean, interest rates didn't hurt them in the first place, right? Because they had no debt. However, it hurt the business environment because people weren't willing to buy $20 million worth of Palantir software when rates were being raised at the highest level in 20 years. But I still think Palantir just going red. I still think that if rates come down, that is going to help the business environment become more liquid and more people are going to be likely to benefit off Palantir. I do think if we get rates down significantly within the next 2 years, so let's say we go from 5.5% to 2%, one thing that will hurt is Palantir's net interest revenue. Right now, the only reason Palantir is profitable, like realistically, is because they have $4 billion of cash collecting 5.5% every single 90 days. And so they are making operating income because their adjusted operating margins are going much higher at almost 40%, but the majority of that income is still treasury bills. So if that comes down, Palantir has to get more growth on the commercial side or the government side and get like more operating income, because if they don't, their net income is going to like tank, right? Like they're just not going to be able to match those numbers. The comps are going to get harder and harder. Like Palantir said next quarter, they're going to do $700 million of revenue, which means next year, if you grow at 30%, they would have to show $910 million of revenue in Q3 of 2025 if they grow at 30% next year, which means they're going to be putting up $1 billion a quarter roundabout going into the end of 2025. So they're going to have to really show those numbers. But at that point, if you're putting up $1 billion of revenue, I don't think you need net interest revenue anymore to match or to make your profitability outlook. Palantir here just green on the day. But that's going to be the biggest impact. I think we'll get more people interested in buying Palantir software because the cost of capital will go down, but they will have to make up for it given their net interest income is definitely going to come down as well. Palantir covered calls. We talked about this yesterday on the market close. It is paying $1 a share for the $46 covered call. So if you don't believe Palantir is going to be $46 by January 2025, which is a basically 50% move from here, someone is willing to give you $1 if you sell them those calls. Again, to sell a call, you need to have 100 shares of collateral. So do I think Palantir could get to 40 by the end of the year? I think it's a stretch, but yeah, I really do. If things really go well, 46 by January just feels aggressive. But if we get into like a absolute face ripper of a rally, all bets are off the table, right? All bets are off the table. Robinhood 1873. So if that's the case, we'll see. But I do think 46 is a bit of a stretch. $1 in premium is still incredible, though, to be able to get that. Rocket Lab at 530. That's up 1.24% on the day. Someone asked me yesterday, should Palantir buy Bitcoin? My answer is unequivocally no. Unequivocally no. Bitcoin below 60,000 right now. The reason for that is because Bitcoin is way too volatile. I don't want Palantir to be grouped in as a meme stock and start trading with Bitcoin. And although I'm long-term bullish on Bitcoin, there's millions of investors in Palantir that probably don't care about Bitcoin, don't like Bitcoin. And I don't want to isolate shareholders by doing something as controversial as putting Bitcoin on the balance sheet. So I know that might be a little bit of a boomer take, but I don't care, dude. I don't want that much volatility baked into the stock. I want regular growth and the premium we're getting because Palantir is one of the fastest AI SaaS names that's growing, not because Bitcoin goes up, 2% and then Palantir is randomly up 2%. Like, I just don't want that volatility. That's not exciting for me. So I say no. Some of you guys may disagree, but I would not be a proponent of that. And then the worst, what if we get into a recession and Google, Google's going to get hit, but Bitcoin's definitely going to get hit. If we get into a recession, no one's buying Bitcoin, dude. Bitcoin's not going to do well. So that's going to be a drag on the balance sheet, which is not needed for Palantir, especially because Palantir might be able to accelerate in a recession because everyone needs to save costs and they justify saving costs by getting rid of all their crappy software vendors and consolidate into Palantir. So theoretically, a recession might be an amazing buy the dip opportunity for Palantir because they actually continue their growth. Google at 161, Google down now almost 3% on the day. Apple is down, it's flat on the day. Microsoft is 414, that's up on the day. And then NVIDIA selling off. NVIDIA now 114, NVIDIA down 2% on the day. All right, there you go. That's what we have in the context of tech. Bitcoin is good. What are you talking about, Amit? I agree. Bitcoin is good. I don't want it on the balance sheet. I just think that's way too much volatility. Again, it's a boomer take. I get it. But because Palantir already has so much volatility and it trades on things outside of just like being, the fundamentals, I don't think it needs to introduce more volatility into that mix. I just think it's a little bit too much. Also, there's a lot of people that just don't want Bitcoin on their company's balance sheet, If you really want that, MicroStrategy is out there. Also, I think it would be interpreted by investors as like a desperate play because Palantir doesn't need Bitcoin volatility to go up, Also, Peter Thiel doesn't believe in Bitcoin anymore, so he's definitely not going to prove that. But they can go up just based on the fact that they're Palantir, not because they need Bitcoin to help them. Let's get some coverage on the street by the suits and see what they think. And this deal that happened this morning. So we're seeing some more M&A activity, guys. The owner of Mars chocolate bars bought the owner of Cheez-Its and Pringles today for $30 billion. So let's take a look at that.
What can I talk about right now? Kellanova? Yeah, we'll talk Kellanova. Let's get to the biggest deal of the year, at least enterprise value-wise. When you add in debt, it gets around $35 billion. When you do equity value, at least based on the number in the merger agreement, you're somewhere closer to 29 or so billion in equity value. That's not what shareholders care about. What they care about is 83.50. And you can see trading pretty tight to that in the early going here. You are going to get a number of dividends at 57 cents for each quarter. So add that in, at least a couple, if not three of those.
Did anyone even know this company, Kellanova? Because I found out about them for the first time today. They're up 40% because they're getting acquired for $83. Nice to see M&A activity. It's good to see there's more capital out there in the markets to acquire companies. But shareholders, if you're in Kellanova, you're up 40% on the day because of this acquisition.
And, you're getting closer to 85. It was a significant premium to the closing price prior to reports of the potential of a transaction, at least talks between Mars and Kellanova. And, they're talking all about snacking. They're lining up their various snacking portfolios. Obviously, for Kellanova, we're talking about a company that was not that long ago split off. Remember, Kellogg.
Wait, Kellanova owns Kellogg's? I just saw June's comment in the chat. They own the cereal Kellogg's? I did not know that. Wow. They look at this. They own Pop-Tarts, Eggo, Rice Krispies, Cheez-Its, Pringles. Dude, they own everything. I did not know Kellanova owns Kellogg's. Look at these brands, dude. These are iconic brands. Wow. I did not know. That's pretty cool. I didn't know that. All right. So they own a ton of stuff.
Is now just those cereal businesses domestically. that everybody knows well, but this is the growth business, so to speak, whether it's Cheez-Its or Pringles or Pop-Tarts or Eggo waffles. You get the picture. There's some of the look in terms of what, and Mars is a huge company, private, as we know, but enormous, with what, $15 billion brands alone. These guys have a couple. And they're getting bigger in snacking. Now, as for the deal itself, they signed the confidentiality agreement back on July 4th, August 2nd, sort of on documents and things of that nature. I've talked about the presence of an activist in these shares for some time. It was actually early in the years, long ago as February, that TCIM got involved there. My understanding is they were certainly threatening to go after board seats. They wanted operational improvements, but I think the real hope was that this thing would get bought.
Right.
When I checked with a lot of bankers at the time, though, Jim, almost uniformly, the bankers that I approached who know this area were like, no, timing's not right. You know, an activist gets involved, but really they don't understand how it works in terms of companies when they're ready to do a deal and they're not. And so whether it's Mars or Mondelez or Hershey, those were sort of the names that were most likely to at least be interested. I was told no. And of course, a number of months later, yes. And in fact, this deal is now done again, the largest of the year. And Mars is private, so.
All right, so Kellanova, I did not know. Dude, I really did not know they own Kellogg's. Honestly, I did not even know this was a company. There's so much money in the world outside of tech, dude. Like Pop-Tarts, cereal, everyone eats this shit. Like this is like a far majority of the world. I mean, these brands must do hundreds of billions of, or at least hundreds of millions in sales, probably in the tens of billions of sales per year. These are worldwide brands. So interestingly to see Mars, which I do know about Mars and the chocolate brands they own, them buying Kellanova seems to be a little bit of consolidation in that part of the food and beverage industry. And I think it's positive. It means there's money. It means there's money that's floating around. It means that they're not scared to make a deal. There's probably some debt in that deal involved, interest rates involved. They're not scared to refinance certain obligations that the Kellanova company already had with different shareholders and borrowers. The other thing that's really important as well about this is that as rates come down in September, hopefully, pound share 30.72 trying to make a little bit of a run again, up 1.07%. We should see more deal activity open up in the M&A sector and in the IPO sector. Now, granted, I think when Databricks IPOs, that's the top of the market. I think when Databricks IPOs, that is absolutely a top of the market. But I do think that when we get that flurry of activity starting, which we've had Reddit IPO, and that was really 2023. We've had a company IPO this year. I'm forgetting the name of it, but Kathy's been buying a ton of it. It's like a healthcare stock. If anyone remembers, you can put it in the chat. Tempest AI. I think there's ticker symbols TEM. Yeah, she's been buying this thing. It fell to 31 on August 5th. Now it's at 42. Year to date, it started the year at 42. So basically it's at IPO price right now. $7 billion company. I don't know exactly what they do, but they do something in regards to healthcare and AI. Again, when I see companies like this, I just think of buying Palantir instead. Like if this company's getting a $7 billion valuation, I would imagine Palantir can do a lot of what they can do in healthcare. Palantir is already doing a lot. So this doesn't excite me, but when we see more of these dedicated AI names go public, I think we have a lot more liquidity in the system, and you need rates to come down in order for that to happen. Now, I think that is a bit bubbly unless the companies can, like if Tempest can produce real earnings, then it's not too bubbly. But if they're just a hay in the needle stack, then we're not obviously going to get good results. And that's where you have to consolidate to better names. And I think a lot of that capital flows back into Palantir if Tempest can't produce really good healthcare earnings powered by AI, And so that money comes back to companies that can really produce that level or those levels of revenue. Palantir is going to have their new merch in the store tomorrow, right? Yes. And Ileana will call in tomorrow. He's the guy running the merch store. He will call in tomorrow for like 5-10 minutes and just explain some of the drops, but it's some dope stuff. I'm definitely going to order a couple shirts. There's water bottles, really fun stuff. So I think that'll be out at like 8 a.m. tomorrow, and he'll call in at like 10 a.m. And we will talk from there. There we go. We got a wild Chad who appears in the chat. Yes, new merch store drops tomorrow. Dude, I am so excited for this merch store because like it's not just hats. Now people will actually be able to like wear gear and it's going to be fun, dude. This is the picture of the merch store. It's phase 2 for Ileana. Again, he'll call in tomorrow. He'll explain a lot of the logic behind this stuff. But you got crew necks, you got hats, you got water bottles, and he wrote right here below, when we received the green light to bring back the store from Papa Carp and Uncle Dave G, that's Dave Glazer, we were keen on designing good quality, non-Chinese made products that members of the community and our colleagues would be proud to wear and look good in. So again, this is not just a random Palantir employee deciding that they want to start a merch store. This is on Carp's direction to bring back the merch store. So the CFO and the CEO of Palantir said, hey, let's do this for our shareholders. This is a thing that we want to do. And so Iliano really has the directive from top down to like make this happen. And I think the reason he has that directive is because Carp is realizing how special of a community that the retail investor is for Palantir. And he's publicly thanked us many times on earnings calls and at AIPCon. So I think that Palantir gear is just gonna be awesome to see people wearing it. Dude, wouldn't it be so cool if you like go to a grocery store and you find someone wearing a Palantir shirt? It's just like, it would be so fun to see that happen. Because so many of us are in this community. I mean, the hats sold out in like a week. So I would imagine this stuff's going to sell out quick as well. And it'll be really cool. Palantir, $30.82, up 1.4%. Let me see the resistance again at 31. Again, we keep flirting with 31. But there's still too many sellers there. Now at 31, there's like 15,000 shares. There's really not a lot of resistance. We just need the buyers coming. Volume is still strong, dude. 11 million shares in 30 minutes. It's pretty incredible. 11 million times this stock is being tossed around, and there's more buying than selling. Which is why it's up 1%. People wearing their investments is cringe. So I've heard this take. I think the take is wrong. I can understand people thinking of that take. I just think at the end of the day, and I've made this argument for the past 2 years now, you want your investment to be a cult. Like, honestly, you want anything you're building in life to be a cult, because cults are what keep momentum and engagement strong. And so if I'm building a YouTube channel, I want everyone to feel like they're part of a cult, right? If I'm building a startup, I want everyone to feel like they're part of the cult. If I'm building a brand, like Supreme, Louis Vuitton, these are all cults at the end of the day. And I don't think that has a negative connotation. If I'm building a company like Palantir and we're in the S-curve of our growth phase or beginning to get into our S-curve, you want people repping that brand. So to me, I think that's very bullish for shareholders. I think if you say that's bearish for the stock, it's a very narrow-minded view. Like, I understand the argument at a top level. It's cringe. I just think you got to be cringe if you want to really develop anything meaningful in life. I mean, that's just like objectively true. Like, if you want to do anything important in life, you have to be cringe. And I think if all the shareholders come together and they're excited to buy the shorts from Tesla, from Elon Musk, or the Tesla tequila, I mean, that generates shareholders that are never going to sell their Tesla stock or are going to think really hard before they sell that Tesla stock. And at the end of the day, if you're an investor, you want people to hold the stock, right? So I think it's bullish. I think it makes sense. And I think over the long term, it's going to continue to impact the overall growth of Palantir. Yeah, exactly. As Chad says in the chat, it's about being aligned with values. Like, what is a cult? It's about having the same values. Like, why are people watching the videos on this channel? Why do people join these streams? Is because we're aligned with certain values. And one of the core values of this channel that started this channel was Palantir, right? Coming together around this random company that none of us knew about, but we were all interested in. And then the content was valuable enough to get people to stay. Same thing about Palantir. Whether you join Palantir because of Carp or because, you're invested because of LLMs and AI and the future of that, there is something that aligns you around the mission. And to represent that via a piece of clothing, I think is just another way to encourage engagement and momentum in that mission. All right, Palantir's 3 cents away from 91. It is really trying to hit. All right, so now there's 22,000 shares at 31. 22,000 shares at 31 that we are trying to break. Oh, there we go. Broke. Boom. 31. Simple, baby. Simple, baby. That was easy. That was easy, bro. 20,000 shares nuked right away. We did that 20 minutes ago. I said there were 18,000 shares at 31 and then immediately went away. The demand is there, the demand is there. $31.02. Not bad. Starbucks down 4%. I know Jed is so happy, dude. Jed is so happy. This guy Jed was at the dentist yesterday and he bought puts on Starbucks while getting his teeth cleaned. Oh, that was an interesting question for the chat. Let me know what you guys think. Where's the craziest place you've been closing a trade or buying the dip? Like, where's the craziest place you've been? Because Jed was getting a cleaning yesterday. He looks at his phone. He looks at Starbucks up 20%. He's like, screw this. Goes into Fidelity, buys a bunch of puts. And they're probably up right now. Where's the craziest place you've been doing something with stocks? I'm curious. On a plane? I've been like on Webull on a plane, but I never had access to like Robinhood on a plane. I've never bought anything on the plane. I think I was in the car, dude. I remember specifically, dude. I remember Palantir was like $8.50. Like, I don't know why I was thinking about this yesterday. Palantir still above 31. By the way, Tannor, I'm about to show a clip from your podcast. I see Tannor in the chat. We're gonna watch a small clip from Tannor's podcast with Vlad in a second, and then you guys can go to his channel to watch the whole thing. But I remember when Palantir was like $8. I was going to the chiropractor every week because my back was like in a lot of pain and stuff. And I remember, dude, the chiropractor, I had to wait like an hour to get like fixed. For the chiropractor to blow my back out. That was a joke. It was a joke. Relax. It was a joke. but technically, right? Anyway, I remember I would be driving and I would buy like 100 shares every week of Palantir. And so when I went to the chiropractor every week, I would buy 100 shares of Palantir. And I remember I was at a traffic light and I just like, so I was like 8:30. I was like, fuck it. And I bought 100 shares at that moment. So that's the craziest place I remember being involved with stocks. But but that's the craziest time I bought stocks. What do you guys say? I was on a cruise ship. What else do we have? While getting okay, Daniel, I'm not going to repeat the last part of that word. Palantir now getting hit by $30.88. On the toilet. The toilet is not dude, everyone on the toilet has bought stocks. Like, that's not, if you haven't bought the dip on the toilet, then you probably just aren't a dip buyer. Everyone's bought the dip on the toilet. I was getting a haircut. Oh, I've done this too, dude. I definitely have done this while getting a haircut. You know, it was funny. I checked Robinhood the other day when I was getting a haircut, and I just opened it up to look at it real quick. And then my barber was like, "Are things good or bad?" And my barber, dude, he doesn't like, I've never heard him care about stocks. Like, we've never talked about stocks. And I was like, "What do you mean?" He was like, "Market, things good or bad?" I was like, "Oh, things are good." It's like, it's green today, but that's it. But he's never really asked me too much about the markets. So, all right, it seems like all of you guys on the toilet, that's when you bought the dip. So I think Jed wins the prize. He was getting his teeth cleaned and he bought Starbucks puts. Look, I don't think that's a crazy idea to get puts on Starbucks. I was thinking about it yesterday. I just think the momentum around the CEO is real, and they really hated the previous CEO. If you guys saw the interview with Kramer 4 months ago with the previous dude, I found there was a Fortune did a piece on him. He doesn't work past 6 p.m. He said, "I don't work past 6 p.m. because I need work-life balance." I'm like, Brody, if the stock's up 20%, maybe you can get away with that. Robinhood at 1860. If the stock's down 30%, you can't say I don't work past 6 p.m., my guy. Like, you're not going to have shareholders that are happy about that. Like, no way, dude. I don't care how impressive of a CEO you are. Like if Jensen Huang is still working past 6 p.m., and he's running NVDA, you're running a little coffee company, like, maybe he's just not the right CEO. Maybe the work-life balance doesn't match, right? So I think the market definitely is bullish that he's not the CEO anymore. Okay, let's talk about Robinhood. We'll get back to Palantir in a bit. Let's get an update on Robinhood. So shout out to Tannor, good friend of the channel. He got a podcast with Vlad, CEO of Robinhood. Super, super exciting stuff. And I thought the podcast was great. So I'm going to put it in the chat. Please make sure to watch it. I'm going to show 5 minutes of the podcast. And the 5 minutes I'm going to show is Vlad talking about the credit card, because I think a lot of people have been critiquing Robinhood on this credit card business model. And I think Vlad shares a lot of insights on getting over that concern in this clip. And so I want you guys to check it out, and also just say congrats to Tannor in the chat for getting this interview. It's not an easy thing to talk to some of these people. They're very busy. 30 minutes of Vlad's life is worth a lot of money. So the fact that he was willing to sit down and talk with people like me, Tannor, retail investors, that really matters as well. Chat says, remember Sham's blog post on this work-life balance? Yeah, that's another thing, dude. I don't know if you guys have read this. I read this back in 2021. Let me see if I can find this real quick. Yeah, right here. He put it on his Substack. So let me share this in the chat. We'll play the Vlad interview in a second. This thing right here, everyone should read this. Sham wrote this a long time ago on work-life balance. It's called The Case Against Work-Life Balance. Phenomenal essay, dude. I was reading a lot of his blog posts back in 2022 because I was like learning about the company. And he's been blogging since 2006. He's been blogging for a long time. And basically Sham is like, dude, if you want to get anything meaningfully done in life, you have to fucking work. And so it's a very, very, very strong blog post for anyone who's like trying to figure out how they build anything and like dedicate themselves to the process. And I think the Starbucks CEO was not that type of guy. All right, here we go. Here's Tannor and Vlad talking about the credit card, and then I'll share my thoughts on what we think we're going to get in the July numbers. And once again, congrats to Tannor on the interview.
It's been amazing to watch you guys sort of transition from, the reputation and trajectory of going from small dollar, like active trader accounts to fully fledged financial services where you're getting into saving, now spending. I really want to talk on the credit card as well. But essentially the way that I'm looking at it is Robinhood Gold, every product that you guys offer, from cash sweep to buying and selling stocks or options, you guys in some form of another make money with very little risk. The credit card is quite a different step than that. And you guys are offering unbelievable benefits, 3% cash back on every purchase. This is not a category card. This is a full-on credit card. Is there any concern that is going to be a losing profit?
Basically, Tannor wanted to be like, how the fuck are you guys not going to go bankrupt on this? But he said it in I asked the same question. And so me and Tannor both were like, so how the fuck, dude, how are you pulling this off? Like, can you please explain this?
Generating new product for you guys? Like, are the credit cards can be quite risky, no?
Well, one way to kind of look at this business is you can look at companies that do this very, very well, right? And some of them are public, like Capital One, for instance. And they actually do it really nicely. I don't know if you probably spend a lot of time parsing through 10Ks, but you can see the economics of the credit card business pretty clearly. And the economics kind of break down in a couple of different categories, right? There's interchange revenue, which you typically net against the rewards expense, which is kind of a contra revenue. And then there's like net interest margin, which is actually the bulk of it. And sort of like not specifically contra revenue, it's another line item in the expense column, are loan loss provisions.
Right.
So when you take a look at sort of like these traditional credit card companies that are at scale, and Capital One, for instance, has a $150 billion loan book, so massive scale for the credit card business. You can see that if you take the overall revenue and divide it by the transaction volume over the course of a year for the business, you get to a number between 5 and 6%, right? So if you kind of normalize everything based on annual transaction volume, they make between 5 and 6%. Now, why can't they give 3% cash back to customers? I think is a reasonable question. The biggest line item isn't credit risk, and it's not loan loss provisions. It's marketing and advertising and headcount. Like tremendous headcount businesses where.
So this is the first insight, okay? So Vlad says, hey, if you take the percentage from the total revenues generated by a credit card business divided by the transaction volumes, you get 5 to 6%. However, the reason most businesses like Capital One cannot give back 3% in rewards is because the majority of the expense, or one of the largest elements of the expense, is sales and marketing, where you're charging upwards of $500 just to acquire a user. So Vlad's thesis is, hey, if we're making 5%, we can give back 3% if we don't lose the other 2% paying to get the person to get in. Now, maybe the card still loses money on that 3%, but it loses significantly less money, if not turns a profit when it gets to scale, because we've got the sales and marketing under lock. And that's the insight I think a lot of people are missing in the context of Robinhood, along with the fact that the 3% cashback just goes back into deposits because a lot of people just put it back into the actual platform. Which is the way that Robinhood's really going to scale this to be a very disruptive credit card business, because they've got the sales and marketing figured out.
They have tens of thousands of employees. Now, the idea behind Robinhood is, can we make the value prop and the reward so good that we don't have to actually spend money to acquire customers, credit card companies are spending $500 plus to acquire a customer and have sign-up incentives. Can we just take all of that and put it into the economics of the product and acquire customers for free? So far, that seems to be the part of the model that's proven out. Like
an unbelievable benefit. The organic growth on this card, I see it. Everyone is talking about your card. It's crazy.
People love the card so far. It's 5-star review on the App Store. They love everything about it. I mean, the customer experience, the design of the card itself, particularly solid gold. The rewards are really good. So, you know, we can grow this card for the foreseeable future without spending anything on marketing, which is big. And we can do it as a technology company in a very capital efficient manner without needing, you know, thousands of people, which is also really, really important. And then, and I know there's a lot of frustration from people about, you know, I just want to get it sooner. This rollout is going slowly. And we announced that we rolled out to about 50,000 cardholders. And we're very confident the card will work in the long run, right? But it might take some iteration. And if you look at other successful card launches in the past, we're kind of right there. I mean, they tend to launch to tens of thousands, below 100,000 cardholders in year 0, right? And then they can kind of like expand very, very quickly as the economics are proven out. And what we want to do is minimize the amount of that iteration that is being done sort of like with lots of customers, because even though we're confident, you know, we want to avoid as much of the downsides and foot faults as possible. So, you know, we're actually like rolling out at a very reasonable pace relative to other successful card programs in the past.
Yeah, the demand is just so high, it makes it look slow.
Exactly. Like people just want the card so much that, yeah, of course, you know, if you have millions of people on the wait list, you're going to see some noise. And, you know, we want to serve them, but we also want to make sure that like we can go slow so that we can go faster down the line when it really matters.
Okay, so we got Tannor in the chat actually agreeing. I trust Tannor's opinion on this because Tannor is, you know, one of the main guys analyzing fintech, at least in my universe. And he buys into Vlad's answer on the credit card. So he says, I asked, hey, Tannor, do you buy into his argument that sales and marketing is the highest expense, and if they can get rid of that, they'll be able to give back the 3%? He says, yes, I just thought when he brings up Capital One as the example, it's a little far-fetched. That's fair. Dude, if Robinhood can make a profit on this 3% and not lose money, and I think they will lose a little bit of money for the first year or two, but if it's not like dramatic losses, and obviously they have to get delinquencies right, they have to get loan loss provisions right, they have to get underwriting right, they have to get a lot of shit right. But if fundamentally they're not losing that much money for 3 minutes, yeah, I'll send you the link, Tannor, on Twitter, then, dude, you've got a credit card business that, I mean, if they already have 50,000 people and millions of people want this damn card, they're going to have a lot of people signing up. Imagine they have a couple million people. They already have 2 million gold subscribers. Imagine they get 50% of them, 1 million in year 1, maybe the next million in year 2. Maybe they get to 5 million over the next like 6-7 years. I don't know what the trajectory is on credit card launches. I have to do some research on that. But let's just say they get a couple million people using this. This is something that's going to be doing serious revenue for them. And if they're actually making money on the account balances and not losing on the 3% rewards, and the 3% rewards is just encouraging more deposits, which is the lifeline of their business. Like, I just think it's a fucking incredible go to market. It's one of the most innovative things I've seen in a very long time from a fintech company. And it looks like they've got the math worked out. Now, obviously we can get a recession and people default on the loans and like all that like is a risk. But I still think they have a core vision planned out, and they just need to get you into the Robinhood ecosystem to make that play out. All right, the man himself who conducted the interview, Tannor, what's up?
Brother, thank you for having me on. Yeah, I believed his answer. The only thing is like, one, I was super nervous. That's why I looked the way that I did.
Which is fine, dude. You're talking to a billionaire, dude. It's not easy to like keep a straight face. So I feel you. I get it.
So there was a part in the interview, right there. I was not going to ask about the credit cards. They made me cut out a section of the interview where I guess I just prodded a little bit too I went too close to the sun.
Yeah.
So I had to cut that out. And then ask about the credit cards later on. So the interview was supposed to be about 3 minutes longer than what it was, but
the part that made you cut out, was that giving a little bit too much? Was that him hinting too much at their like future stuff about?
Yeah, I asked about a product that wasn't on their roadmap officially.
Gotcha.
And yeah, I mean the answer wasn't anything crazy. Regardless, I mean he just said that they're going to be going after full financial services products. So.
Right.
Yeah.
But legal departments are tough on that stuff.
Right. So, in terms of what he said, though, I mean, I totally see the benefit of not having the sales and marketing expenses because it is going to grow so organically. The problem is that the reason why I don't like the Capital One example is they are the best in the business. It's unbelievable to suggest, in my opinion, to suggest that what Capital One did and then the strategy that Nubank followed, because if you know, they got Diego Cerruti on their team, who ran the Nubank credit team, came from the Capital One division, like understands that 100%. They are not following that playbook at all. They're giving people tons of credit limits. They're going sort of a different direction. So, well, I do think that there could still be a ton of success. Just because Capital One does not see the defaults doesn't mean that your underwriting team will. I mean, hopefully we can, we'll see soon. But
so for the people that are saying they can't afford to give 3%, is he correct when they say they make like a 5% margin? So theoretically they can,
if they don't default. Yeah. If you're Capital One, if you're JP Morgan. Yeah, they make 5 to 6%. That's amazing.
Right.
If you are SoFi, which has a very good underwriting team, you're losing a crap ton on credit cards. And partially that's because they're a new credit card team, but there's more companies that have lost money on credit cards than have made money on credit cards.
Correct.
So credit cards can be amazing, but that doesn't necessarily mean that Robinhood's will with no underwriting background.
Yeah, I think that's the biggest risk is how do they figure out the underwriting process? We're already seeing credit limits are like 4x, what the average person would get based on screenshots I'm seeing. I think their hay in the needle stack here is the deposits. I think their ability to generate those deposits as returns subsidizes a lot of the fear. But if the underwriting sucks, which I don't think it will because they got Diego, they have a good team there. If it sucks, then you're right. It could go belly up.
Yeah. Overall, man, I think it was a good call. I learned a lot. And those are the questions that I wanted to ask were things that I was wondering about. But anyway, I'm not going to keep too much of your time. I'm going to go for a run right now. But
okay, one question before you leave, and everyone, please check out this interview. How did it feel, dude? This is big for you. I know you've got another interview coming up, and I'm not going to say who. But
I do have another interview coming up with another CEO, but you guys will have to wait to see what company it's for.
How did it feel landing this, getting it done, and what is your trajectory on more of these interviews?
I mean, I spoke to you about this, so I'll just open up my thought process a little bit. Is just I want YouTube to be part of the press tour for Vlad. I mean, essentially the way that the call went is he was in the call 8 minutes before the show even started, when we were scheduled for it. But although his camera was on and everything, he was on a separate laptop having a full-on discussion with someone else. I have an idea of who that is, but I'm not going to say. But then the second that call wrapped, he went with me. The second that call ended, what do you call it? Like our call, there was no after show conversation with Vlad. The second it ended, he went to another call.
He's busy. Yeah.
They're back to back to back. So my hope is that there is some level of retail analyst community where these investor or these public CEOs realize that, especially for brokerages, like that's the people that are watching are their customers, So hopefully this continues on a quarterly basis. talk about their earnings, talk about other aspects of the company and their future and where they're headed, because it will become a larger percentage of their analyst base, and it's important. And it's not just retail investors that'll watch that conversation. There will be institutions that watch, your interview with Vlad, my interview with Vlad. So I think it's important to I don't know, get more time in the spotlight for them, and hopefully that happens with more of the companies that we're covering. I mean, me specifically, I want to get it so then all the fintech companies end up doing a quarterly show eventually, so then we can hear more directly from them and answer some more retail questions, not just institutional questions.
Okay, so tease this next interview you got coming up. What should we expect from it?
It's a fintech CEO.
You already know what everyone's thinking, but
yeah, it's not what you're thinking. It's not Noto. It's a company I absolutely love. Super excited. I'm going to be more nervous talking to this person than Vlad. However, I was starstruck for Vlad, but yeah, I don't want to give too much of it away. It'll be a lot of fun. It's a fintech company.
I love it. I love it. Exciting stuff. Thank you for being on. And everyone, please make sure if you're not subscribed to Tannor's channel, subscribe and watch this interview, because it's always cool to see a YouTuber get to talk to people in the big leagues. So thank you, Tannor. Appreciate it.
Thanks, guys. Really appreciate your time.
Yep. All right. So that's what we had from Tannor. Robinhood 1884. Now, final thing on Robinhood, then we'll move on. My predictions for Q2, we get the July metrics. We get that today after the bell. I'll be live at 4 or 5. We're also going to watch the crypto podcast that Vlad did. So we'll have like a watch party after the market close, and we'll continue to watch that at like 5 p.m. ish. Here's my predictions. I think cash sweep's going to be $21.5 billion. It was 20.9 in June. Net deposits will be another $4 billion. Management already told us that. Assets under custody, I think we gained a ton in July, but then we sold off at the end of July. So I think we gained another $2 billion to 141. Currently we're at 139, but this could vary by 3 or 4 billion. And I think we had 50,000 funded customers. Equities, trading volumes. They already told us, hey, July volumes were up 20%. Equity should be close to 103 billion in trading. It was 86 last time. Options contract should be 157 million. It was 131 million last time. And then crypto was 4 billion. It should be about 5 billion this time. Margin balance, I think this goes up about 5%, maybe up 10%, because it's up 10% over the past 2 months to about 5.2 billion. Now, what does this mean for the stock? I was looking at the historical trajectory of the stock post earnings in Q1. And honestly, every earnings, Robinhood is not that volatile. The stock is basically flat. And then about 15 days later, the stock starts to move up if they had a good earnings. And I think that's because, and we talked about this yesterday on the market close, right after the earnings, about a week after, which we're now a week after Robinhood earnings, you get the next month's metrics, which is even better than guidance. It's like legit results. So they're not like guiding anything. They're like showing you how they did. So you can start forming what the next quarter is going to look like. And I think maybe it takes that data for the street to reconcile that as well, for that to give you momentum. In general, I think the reason Robinhood has not like took off to like $24 or anything like that is because I still think the market is very scared of a recession, and you're not going to give Robinhood that type of a multiple. Like when Robinhood was $24 at July, in the top of July, everyone felt like we were going to 6,000 on the S&P by like the end of August, right? Like it was super risk on, and that totally changed with the carry end trade. So now that the market is kind of willing to figure out and wait on if we get the rate cut, if CPI is good, which we got today at 2.9, if unemployment is not that bad, and if we're actually going to have a bull market run, I think that's going to, take some time to allow Robinhood to gain that momentum. And so we'll see what the July results are today, but I think that's kind of the reason the market is pricing that in right now. Palantir, $30.63. Tempest AI, $42.74. Kellanova, again, that got acquired today. NVIDIA still down, recovering a little bit from 114 to 115. But still down. Apple at 220. Google really getting hammered, dude. I do not know why people are selling this off on the DOJ trying to break them up. Like, we know that's not going to happen, but I guess the market is still scared. Rumble down 3.38%. Google down 3.5%. MicroStrategy down 3.64%. Taiwan Semi down 2.69% on the day. Okay, that's what we got. Nubank had a great earnings as well. Nubank, Tannor did a video on them yesterday if you want to check out his video. But yeah, Nubank's up 3.74%. Just incredible growth, dude. Just incredible growth. So Nubank is doing their thing, and they're really showing in Latin America how to scale a fintech company to, at this point, 105 million users, which is incredible, incredible stuff. Tesla is back below 200. or it's about to be. Wow, it's down 3.64. Well, where's the S&P? I'm surprised Palantir is still above 30 if we're seeing this red. Yeah, S&P is down almost 0.5%. QQQ is down 1%. Dude, the fact that Palantir is actually holding 30, like legit holding the mid 30s, $30.47, even with the NASDAQ and the S&P falling, even with NVIDIA falling today, it's really incredible, dude. I mean, it's really incredible. Like, if we close above 30, that'll be the second day in a row since 2021 where we have a nice close at 30. And, I think the normalization of 30 starts to become a legit thing. CPI was good. Why the sell-off? We always sell off on CPI, but I agree. CPI was strong enough to not justify a massive sell-off. So, I mean, and we're not seeing a real massive sell-off. We're seeing a little bit of volatility, but it's nice to see Palantir still hold that $30 range. Okay, what are some other headlines that I have? Oh, here's something. Look at this. So someone made 5,000% on a Starbucks call yesterday. They turned $20 into $2,000. They turned, so two contracts, so $40 into $2,000. They bought an $80 Starbucks call on August 12th, and Starbucks went to 95, and they probably sold this morning for close to, up 5,000%, if not up 3,500% if it declined a little bit this morning. But that's crazy, right? Like, that's crazy. That's the power of short-term options. Like, this is why people get sucked into this game, because they're like, oh, I can, it's only $20 and it could turn into $1 million. But like 99% of the time, you're not going to get this call right unless you're just like an amazing trader on the weekly. So this was definitely a gamble, but dude, $20 turned into $1,118. So basically 20 cents turned into $11.18. It's kind of crazy, right? Was it insider trading? Maybe, dude. Maybe that guy knew something. But it's been it was a hell of a move. Now let's look at this chart in the context of the volatility index. So this is a really interesting chart. The S&P 500 over the past 50 years has had better than historical period returns going out 13, 26, 39, and 52 weeks after the first weekly spike above 45 on the VIX, which is the volatility index. 13 weeks after the VIX spike, the S&P is up 80% of the time on average, and the median returns of 5.46 and 5.7% respectively. The index is also up 80% of the time 1 year later, with an average return of 14% and 18%. So if we assume the S&P will be up 14%, the low end, from the bottom on the VIX spike above 45, you're looking at an S&P of $577 if this is correct historically. So, and that happens 80% of the time. So there's a 20% chance that doesn't happen using this precedent. But the last time this happened was 2020, right? February 28th. So VIX spiked, and 52 weeks later, the S&P was up 29%. 39 weeks later, it was up 23%. 26 weeks later, up 18%. 8 weeks later, it was still down 4%. 13 weeks later, it was up 3%. We're only 2 weeks in to that bottoming of the S&P. 4 weeks later, it was down 14%. So maybe that's where Dan Niles feels, hey, like, we're still going to see some pain in September because that's only 4 weeks after the VIX spike. But 8, 12, 13, 26 weeks later, 52 weeks later, maybe we really see some momentum, given that was the top for the VIX and the bottom for the S&P. Palantir 3056. So let's see what ends up happening. But I think, most people agree that when the VIX spikes, Robinhood at 1874, S&P 540, you tend to see a lot more volatility to the upside after, because you had so much volatility to the downside the day it actually goes up. So that's what we have here. If he knew something, he wouldn't have only bet $20. That's a good point. If it was actually insider trading and he knew that they were going to get a new CEO, he probably would have bet, like, dude, if he bet $1,000, dude, he would, I think that would be close to 500,000. He would turn 1,000 into 500,000. Like that, dude, that like, dude, if you knew, you knew, right? So that's a good point. He probably did not know to only bet $20. Still, dude, incredible return. Incredible return. It's just that stuff will get you, dude. That gambling stuff will absolutely get you. All right, let's get into some more coverage from CNBC, and then we'll keep going from there.
Having a good day. Consumer staples, industrials, real estate, and healthcare, they're all higher. Communication services and technology are lower, which is dragging down the overall index. The NASDAQ down 0.4% after what's been a pretty strong run this week, thanks in part to NVIDIA. one of its largest components, having a nice rebound week. As far as the Dow, it is higher, and that's because Home Depot is adding 27, United Health, Travelers, American Express, and Microsoft, all big gainers today. Take a look at Treasuries. We're seeing a mini rally with yields coming down a little bit, the 10-year 3.8%, the 2-year yield just below 4%. We're 30 minutes here into the trading session. Here are 3 big movers we're watching. Kellanova shares popping on news. Mars is buying the consumer food company for around $30 billion, $83.50 per share, biggest deal of the year so far. The CEOs of both of those companies will be joining us exclusively next hour on Money Movers. Alphabet also on the move today following reports that the DOJ is considering a bid to break up Google following a court ruling last week that found Google monopolized the online search market. We're going to talk about that one too. And then watch Brinker, the parent company of Chili's and Maggiano's, reporting an earnings miss and lower than expected profit outlook.
Whoa, Brinker's down 14%. Is this another restaurant name? Interesting. Yeah, their ticker symbol is EAT. Did anyone know about this company? Ticker symbol EAT. I'm going to pull up their earnings right now. I didn't know they were reporting today.
For the full year, despite a jump in fourth quarter sales from higher prices, the stock down more than 14%. Guys, the big news though in the world of macro in the markets is the CPI report. Always a lot of anticipation lately on these inflation numbers, but increasingly, and this is a good thing, they're coming in line and less dramatic. So we got 0.2% on the monthly increase. That was about as expected. And on the core, if you strip out food and energy, you also got 0.2% on the monthly increase. And actually, if you don't round it, you get an even lower number, which is good news for the Fed, good news for the market, helps the Fed cement the idea and feel more comfortable with the idea that they can cut rates starting in September. So where are we on the year-over-year numbers? Because we know the Fed targets 2%, right? And they look at PCE, which comes out later in the month. But we got down to 2.9% on the headline number. That's good. And then on core, we're at 3.2%. Where's the inflation still happening in the economy? Well, energy was flat. That was good. Food is still 0.2%. And it's higher if you're eating away from home at the restaurants than if you're eating at home at the grocery. Shelter is still a problem. That's that owner's equivalent rent, which because of the way they calculate it, it really does lag. So economists aren't that concerned about it. And transportation services also a contributor, and that's auto insurance, which saw another more than 1% jump on the month. But used cars down 2.3% on the month. Apparel continues to be deflationary. Medical care services came down a little bit. I would add airfares to that mix as well, which helped the overall transportation services. So all in all, guys, it's good news for the Fed and for the markets itching to cut rates, but it's not necessarily indicative of a 50 basis point cut, which some in the markets were getting excited about lately, or an intra-emergency cut because the Fed is so behind the curve. Because there are still areas, David, of the economy that are looking hot. So if there's disappointment around this number today, it comes from the fact that the market is just getting too aggressively priced for rate cuts. They're pricing in 100 basis points of cuts by the end of the year.
By the end of the year.
200 by next August.
Where are we on getting 50 in September? And I'm curious if we do get 50, what you think the reaction will be in the bond market and the equity markets, but the bond market even more so.
The expectation now, so the market's not convinced of 50, and economists certainly aren't convinced of 50, and this report won't convince anyone at the Fed of 50. We'll get a labor. So now what this does is it puts the onus more on the labor market data. And that's going to determine whether we get a 50 or if we get more rate cuts. Because if labor market now the bigger risk in the Fed's two-sided mandate, then that will determine it. So if we get a really weak jobs report in early September, maybe then the odds go up at 50, right? In the Fed mind, in investors' minds, because right now we're not quite there yet. And that's the takeaway of the data. Kris over at Forward Bond says the inflation outbreak is over. And therefore, we need to overweight the jobs number. And they will get the August jobs number before the September meeting. So I think that'll be important in determining how big of a rate cut we get. We heard from Atlanta Fed President Raphael Bostic. He suggests that they're getting close. Remember, it was just July in the July meeting where they pivoted the language towards an easing bias. I mean, they were in a hiking bias before. He says it would be really bad if we started cutting rates and then had to turn around and raise them again, right? That would introduce all sorts of uncertainty.
He did say that yesterday, but again, I think he's just being a bit bit hawkish, dude. Like, I think he just doesn't want the market to get excited, but they're gonna still cut, in my opinion. But now he's saying, well, we shouldn't, basically Bostic is saying, hey, we shouldn't cut and then have to raise again. But we all know we need to do the cut. So like, it's irrelevant for him to bring this up unless he genuinely thinks inflation is not, done with yet. And it's definitely not done with yet. But I mean, we're at 2.9% and they wanted 2%. So we are much closer than what they thought. And if unemployment is going up, I think they're going to have to cut.
But it's coming. It's coming. If the economy evolves as I expect, you all have bigger smiles on your face by the end of the year, talking about the cut. So they're warming to the idea. And I think a lot of people expect Chair Powell next week when he speaks at Jackson Hole to sound more confident. He was a little wishy-washy in July about the idea of cuts, sound more confident that the cut is coming, but obviously not pre-commit and certainly not pre-commit to a double, which is a 50.
Right.
Because we just don't know yet. I mean,
she's right. We just don't know yet. And until we know, I think it's going to be very hard to figure out, how this ends up playing out. But we will know soon in September. And we got a lot of better data as of today with CPI coming at 2.9. That makes it at least easier to feel the Fed is not going to do the nonsense they've been doing, which is not cut rates. Because although I get why they haven't cut rates, it's time. It is time, dude. It is. And like, if we really want to risk it, like, it's just so, if the Fed is supposed to be forward looking, they were not forward looking on inflation. Okay. That was an L. We'll move on from that. Still managed to have a pseudo soft landing. Now you've got to be a little bit more forward looking. And if they've refused to be forward looking again, then it's just like, all right, this is, then you can never trust the Fed ever. If they mess this up, you can never trust. I know some people already don't trust the Fed, but forever, for the rest of history, because the data is so obvious at this point. It was obvious with 2020 inflation, even though I'd give Jay Powell pass because we printed a lot of money. I understand he was under a lot of pressure. This time it's obvious. And if they mess it up this time, it's just going to be unbelievable. So Tanner right here tweeted, someone in a MIT's live stream chat said I was a hay in a needle stack. Such a good insult. I can't even hate it. My response to this was that the metaphor is a needle in a haystack. So for whoever said that in the chat, this hay in the needle stack nonsense, you have to like learn your phraseology. It's needle in a haystack, not hay in a needle stack. So I don't know who said that in the chat and who was mean enough to call Tanner a hay in a needle stack, but that's not how you say it. Just making sure people effectively understand that. If we get 50 basis points, will you eat a bucket of mayo? I'm not going to commit to it because I think there's a chance we get 50, but if you put a gun to my head, I would say we're not getting 50. There's no way we're getting 50. So if they're barely going to give us 25, dude, they're not going to give us 50. Okay, so this Brinker company down 13%. I don't know why they're down so much. I'm looking at here's their metrics. So they're up on sales, 1.1 billion for the fourth quarter. That's compared to 1.064. So it's not up a lot, but it's still up. Diluted net income per share, 124. That's up from 119. So they're beat on the top and the bottom line. Comparable restaurant sales increased 13.5%. That's a big metric for restaurants, with an increase of 14% for Chili's and 2.5% for Maggiano's. Has anyone been to this one, Maggiano's? I know Chili's, but I've never been to Maggiano's. If I'm saying that wrong, I don't care, dude. At this point, I just don't care. But I've never been to Maggiano's. CEO says we've achieved another quarter of solid progress against our strategy to deliver profitable, sustainable growth. We significantly outperformed the industry in both sales and traffic during the quarter while maintaining record high guest metrics. With significantly increased traffic at Chili's and many guests trying Chili's for the first time, we quickly accelerated investments in labor and the facilities to ensure a great experience. So the CEO saying, hey, we hired more people. We have more demand. We increased sales at Chili's by 15%. Why the hell is the stock down 14%? Like, what do they say that's getting the stock down? That's really interesting, dude. It's Olive Garden, but nicer. I'm going to look it up right now. I know Chili's, dude, Chili's, in my opinion, is trash. Like, I've never liked Chili's. So Norman Brinker, oh, that's his name. He owns Chili's, Romano Macaroni Grill, and Maganio's Little Italy. So I've only been to Chili's, and Chili's is not that good in my opinion, but Maganio's Little Italy. Okay, so this is so your guys are saying it's a better Olive Garden, essentially. I actually really like Olive Garden. I know people are not going to like. I really like their tour of Italy meal. If you guys have been to Olive Garden, and the bread, dude, the bread. I think they have some of the best. Cheesecake is the only one that has better bread than them, but their bread and salad is. I like it. I like Olive Garden. Is there one in New Jersey? There's one in Bridgewater, New Jersey. Okay. I've never been here. Maybe I'll try this out. I've never been here. I like it. Dude, did you guys know Italian food is my favorite food? Did you guys know that? Italian food is my favorite food. EPS was terrible, so it probably didn't do well against the expectations, but it is up year over year. But that's fair. That's fair. The EPS could be lower than expectations, even though it's above the year over year metric that they had. That's probably why it tanked, because there's got to be something other than same store sales or revenue growth. And it doesn't look like guidance is bad. It looks like that quote says guidance is going to be good. They also didn't say consumer weakness. They didn't mention consumer weakness once. Robinhood at 1887. But yeah, Italian food is my favorite food, dude. Like, I think after Italian, it's Indian food. And then after Indian, it's sushi. But I love Italian food. Like, I don't know. I think I had Italian food when I don't know. The first time I had like real Alfredo pasta was probably I was 10 or 11 years old. I've loved Italian food my whole life. Olive Garden is Italian food. So I know people say it's fake Italian food, but it is for the type of food they provide, it is Italian. It's not the best Italian food, but I like it. I don't mind Olive Garden. I really like Olive Garden. I've been there many, many times. That and Cheesecake Factory. So Italian food is my favorite, and then Indian food after. I would put Indian food first, but I really do love pasta, bread, butter, and some veal or some Parmesan chicken. Like I love that shit, dude. I'm not a big meatball and spaghetti guy, but I love linguine, fettuccine, Alfredo pot. Maybe I just love how those words sound, but I love that stuff. Amit, you live in New Jersey. Some of the most amazing Italians in the country live there. Why are you going to Olive Garden? Well, that's a fair point. Now, that might be another reason I like Italian food, because New Jersey has always had, there's a lot of Italians in New Jersey. So there's a lot of like mom and pop shops. I've just always been to Olive Garden, dude. I really haven't explored the Italian cuisine in New Jersey, but I should do that. You're right. I should do that. I absolutely should do that. Someone said, as someone from Europe, Italian food in the US is nothing like eating the real Italian food. That's fair. And that's why I told Arnie, dude, when I come to Italy, you got to hook me up. I want like real Italian cuisine. Robinhood 1883, Palantir 3082. NVDA goes green right now. But I didn't know. Eat. I didn't know that was a public company. So Kellanova, I found out about today. And then Eat, I found out about today, down 12%. $2.7 billion market cap. We were talking about restaurants yesterday. Kris gave his sweet green thesis. We both agree that if Chick-fil-A went public, it's a easy buy. If Chick-fil-A and YouTube went public as independent companies, dude, I feel like they would have to be part of the portfolio. Like, there's no way I don't own YouTube, and there's no way I don't own Chick-fil-A. I'm still surprised Google's down on this DOJ shit, dude. That is crazy to me. Google down 3.3%. Now it's back at 160. It was at 158. I like it. Google at 160 versus 190. I think the expectations are much more reasonable, but to be down on the DOJ stuff is very interesting. Oh, Thai food too. Yeah, Thai food's got to be up there. Top 5. I think top 5 foods for me are Italian, Indian, sushi, Thai food. I'm not a big fan of Mexican, bro. Like, I like quesadillas, but like, if you are like, hey, do you want to go get Mexican tonight? I'm like, no, like, not really. Like, I don't want to get Mexican. So I guess, my number 5 would probably be just like an American cheeseburger, like a solid American cheeseburger, not from like McDonald's or something, but like if you go to a restaurant and they make a good burger, like a good burger, I'll take that with some fries. I'll like the freedom, liberty, Second Amendment will come out of me, and I'll eat that any day of the week. So, Chinese food. That's a good, Chinese might be number 5. Actually, I might have to take out the burger. Chinese food might be there. Palantir, $30.85, up 1.5%. Let's see the resistance at 31. If it's there. 18,000 shares at 31. I think maybe we can make a run again, dude. This will be the 3rd time today to make a run at 31 if we can get through these shares, but let's see. Medium or well? Oh, the size 67 is new to the channel. I don't like medium rare. I like medium well. So I'm one of those guys when it comes to my steak. I'm not a medium rare guy, even though on my burger I usually get medium rare, but on my steak I get medium well. So that's the one that I like. Is Five Guys so much better than McDonald's? 1,000%, dude. Five Guys is like amazing. Five Guys is incredible. And now it's pricey, but it's a lot better. All right, let's hear from Ed Yardeni and his thoughts on what's going on in the market and where we currently are in the macro cycle.
Well, we're running 1.6 on a 3-month annualized. So that is below target, although it's only 3 months. Let's turn to the market reaction today following the print. Joining us this morning is Ed Yardeni, of course, Yardeni Research President. Ed, great to have you again. Good to see you.
Thank you.
I think it was Heather Long at the Washington Post this morning who said it's looking more and more like the U.S. inflation battle is done. Are you willing to go that far?
Absolutely. I've been predicting since the summer of 2022 that we get to 2 to 3% by the end of last year and early this year. And we're basically there, and we think that we'll get to 2% by the end of the year. If you take out shelter from the CPI, you're basically there.
That is correct. If you take out shelter, you are there. So if we get shelter to come down, that should help us a lot.
And the kids in the back seat ask, "Are we there yet?" We're there. If you take out shelter, we're at 1.9%.
So we're entering the parking lot, I guess. Are you suggesting that? Then I think shelter is what, 90% of the increase this month?
I believe so. Yeah.
Yeah. I mean, do you expect the follow-on effect to accelerate, or is this going to be a continued test of patience with that lag?
I think it's clear. We all know it's a lagging one, but it could pick up. I mean, it's really just kind of a laggard that's catching up with current rents, because it includes not only current rents but also outstanding rents. But I think time is actually on our side in terms of getting faster decreases in rent.
The other note of yours, Ed, that got my attention this week was yesterday when you talked about what's happening in Kursk with Ukraine, and the notion that if Putin is really pressed, his reaction might be, I think the word you used was unsettling. How high is that ranking on your radar?
Well, it's really number one. The geopolitical concerns have been my main concern. I haven't been concerned at all about the economy, and I still think it's resilient. By the way, I think that the next employment number is going to be a strong one, because I think the last one was weather affected. Inflation's not concerned because it's going the way we thought it would go. So at this point, between what's going on between Russia and Ukraine and the tensions and conflicts in the Middle East, there's a lot of geopolitical risk. The price of oil on Monday was up like 3% on all this war talk about the Iranians about to attack Israel. And then yesterday, I think a lot of yesterday's rally was because the Iranians said, if the Israelis and the and Hamas work out a ceasefire, then they won't attack Israel. So it's on and off here in terms of the geopolitics impact on the market.
I do wonder, Ed, though, if we're in a place, and I talked about some of the more aggressive pricing for Fed cuts, where this benign inflation data isn't as soothing to the market as it once would be, because the market is expecting more cuts, and you would really have to just see a deterioration in the economy to justify those cuts, which is not ultimately good for equities.
Yeah, I've been opposed to a rate cut, but I'm a reasonable person. And if the Fed signals that they're going to cut no matter what I think, then that's what's going to happen. But I think it's a quarter point, and I think it's one and done for the year. I don't buy this 50, 100 basis point cuts in the Fed funds rate.
Yeah, odds of an intermediate cut obviously plummeting here, even after the panic of last week.
That would have been a disaster. That would have been a disaster, because it would have worsened the carry trade unwind.
Yeah, you pointed that out in the midst of all the action last week. It would have been ironic and bad. Ed, thanks, as always, Ed Yardeni.
Sure. I agree with Ed. He's bullish, but he's just saying that, hey, we have to take our time to allow the market to bake in all this data. But inflation obviously is starting to come down via the CPI report. Robinhood 1886, and so it does seem like it's going to start to come down. Palantir at $30.88. Maybe we make one last run for $31 on the day. Let's see right here. Still 18,000 shares at 31. Still 18,000 shares at 31. Michael says, my wife is Mexican. She lured me with her mother's cooking. Yeah, look, Mexican food is very good. I'm not gonna say it's not good. I agree though. Michael said I don't live close enough to a lot of Mexican restaurants to really have the best opinion on it. I've had better than Taco Bell, right? Like I've had better than that. It's just I've never really explored the cuisine as much. You know, I actually took a girl to a date. It was a Mexican restaurant. This was actually the first girl I took on a date post breakup, my junior year of college. The restaurant's name was La Catalina in New Brunswick, New Jersey, in Rutgers. You can look it up. That's the name of it. And I remember that place. And the reason I took her there was because there weren't that many like first date spots on Rutgers. There's like a lot of fast food joints, but like nothing like that would be like a sit down place. And so I remember I took her there, and I remember we had quesadillas, but like I've just never loved other elements of Mexican food besides like quesadillas, which is very basic, right? It's very gringo of me. So it's not Taco Bell, dude. It's not Taco Bell. Dude, I can't make this up. La Catalina in New Brunswick, New Jersey. Like, how do I make that up, bro? Think about that. How do I actually make that up? Who comes up with a restaurant name that fucking specific if they were making up this story? Like, come on, bro. Oh, it's called La Katrina. I just looked it up. Okay, so see, but messing up the name even more proves my point. Look at this. La Katrina. That's what it was called. We were sitting right there. You see this? We were sitting right there. La Katrina, Mexican restaurant. It has 4.5 stars. People like it. It was a good spot. It wasn't a bad spot. And right here, New Brunswick, New Jersey. I can't be that specific and be lying at the same time, dude. You would know if I'm lying. Like, you could tell. Either I'm like amazing at lying, or I'm telling the truth. I'm telling you the truth, okay? But it was funny. Oh, you guys. Oh, do you guys want to hear that, dude? You guys are gonna hate me for this one, but this is the first girl after I broke up with my like 2.5-year relationship, and I just like I started going on Instagram and like DMing. You know, I was like, fuck it, I'm a single man after 2 years. I'm just gonna start DMing girls. And this gave me a lot of confidence. This is the first girl I DM'd. I don't know how I came across her. She was in our mutual friends or whatever. And she responded, dude. And I was like, fuck, is that easy? Like, they just respond that quick? And then I remember, I'll never forget this. I said, dude, oh, fuck. I gotta find the messages. But I made a joke about Amazon Prime. And dude, I forgot the joke, but I made a pun with the word Amazon Prime. I'm going to try to find it in my DMs after this. And I think she was so shocked that I actually fucking like was so aggressive on the approach. Aggressive meaning, you know, just like, I just started flirting right out the gate. That she was like, and then right after the joke, I was like, so you want to get dinner today? And she was like, yeah. I was like, okay, boom. That's awesome. Oh, I found it, dude. AI is getting really good. I typed in the word Prime on Instagram DMs and I found it. Dude, this is so crazy. This is why AI is making social apps better. I type in the word Prime because I remember this joke involved the word Prime, and immediately the DM pops up. So she said, LOL, rainy days are prime profit days for Uber and Lyft drivers. So I guess September 10th, 2018 was a rainy day. And then I said, dude, I said, true. I mean, I guess you work at Amazon because every day is prime pretty for you. I fucking said it, dude. I said it. I cannot make this up. I'm reading this from my fucking messages. This is great, dude. This is great. And then I guess the day after we went on a date. So that's what I'm talking about, bro. So, you know, I'm talking about, you know, this is like, look, sometimes you make fun of my idiosyncratic euphemisms, but they end up working. Okay. They end up fucking working. Like, it is what it is, dude. Robinhood 1893, 3091. Maybe it's, you know, maybe it's like a joke on the stream, but when it comes to like being flirtatious, it works, dude. It has worked my whole life. I'm telling you. But anyway, two things I found out about that. Number one, AI is amazing on Instagram. I did not think I would find the DM that quickly. That's incredible. That has to be due to updated AI in search. And then how did we even get to this topic? We got to this topic because I was not lying about this Mexican restaurant story, but I have not had good Mexican food my whole life, so I probably need to get more. Palantir, all right, how many? We still have 19,000 shares at 31. How much is that? 19,000 times 31. $589,000. Does anyone have $500,000? Does anyone have $500,000? If you have $500,000, please Please, please, please. Please, please, please show it. Please, please, please buy up these fucking shares so we can get back to 31. I think we crack it, dude. 19,000 shares is not like 60,000 we had last time. I think we can crack it. Let's see if we can crack it. Where's Robinhood? Robinhood 1893. Cool. So Robinhood, let's see if it can make its way to 19. Let me see Robinhood's resistance as well. Let's take a look at that. Dude, I can't believe Instagram found those DMs that quickly. That's incredible. At 19, there's 12,000 shares. Okay, so at 19, we need someone to buy 12,000 times 19 bucks. We need someone to buy 228 grand of Robinhood. And then for Palantir, we need someone to buy 500,000 to get us to 31 and 19. Let's see. That's crazy though, right? I am so shocked Instagram found that, bro. Dude, I want to show you guys this. I don't want to show her picture, but I want to show. Yeah, I think I can cover the picture with my thumb. All right, so let me show you. Because I just, out of respect for her, I don't want to show her the picture, but look at that, dude. Look at that right there. True. I mean, I guess you work at Amazon because every day is prime pretty for you. September 10th, 2018. Dude, I wasn't lying, bro. That's crazy. That is crazy. Like, that's wild, bro. Type in prime and it pops right up. That impressed me, dude. I'm not going to lie. That actually impressed me. Like, that's a real, that makes my life more effective, more efficient, faster. This is like a real use case of AI. I can immediately find what I'm looking for, and then I can make content about it. I'm a content creator. I need to be able to make content quickly. I can show you guys the content instantaneously. It's amazing, dude. It's amazing. So there you go. Dude, that's not AI. Well, it's definitely Meta being quicker. Oh, you guys saw the name? Okay, whatever. If you guys really want to look up the name, then look up the name. I don't really care. It is what it is. It's just search. I feel like there's something better than just search there, dude. Like traditional search, that shit did not happen years ago, bro. Maybe it's not AI, but it's definitely tech getting better. Robinhood 1884, Palantir 3089, still getting stuck at those levels. That's just good search, not AI Elasticsearch. All right, maybe, but that, dude, I've never had that experience with Meta. That was pretty damn quick. $30.87. Still waiting for that $31. Courtney's mad. Dude, if Courtney's out there, can she fucking please message me? It's been years. It has been years. Anybody up 300% on Palantir? Someone posted a picture yesterday of them being up 288%. Their average was like $8.44, which is awesome. So some people that still have those low single-digit averages, which are going to be hard to find because everyone's buying the dip at this point. People are averaging up. Now we know that AI is a bubble. Dude, that's impressive. That definitely impressed me. Maybe I'm reading too much into it, but I liked it. As a content creator, I want shit to happen super quick and fast, and that was important for it to happen. All right, what else do we have? What else do we have? Maybe let's get an update on Starbucks. So here's an analyst talking a little bit more about why Starbucks did the CEO move. Let's get his take on why that's important and why that matters. Let's take a look at this.
Chipotle, and he will take the Starbucks. The company hired Brian Niccol away from Chipotle, and he will take the CEO job at the coffee chain on September 9th. The stock had its best one-day gain since it went public 22 years ago, gaining nearly 25% on the day. Joining us now on what is ahead for Starbucks, Paul Argenti, the professor at Dartmouth's Tuck School of Business. Professor, great to have you with us.
Thanks. Happy to be here.
How much time do you think Brian Niccol actually has to get things done, seeing that they have had a spotty track record in terms of keeping CEOs on? And mostly because you've got a backseat driver here. You got Howard Schultz still exerting his influence, even if from the sidelines.
Yeah, I don't think he has a lot of time. I mean, the previous CEO started in March of last year. And if you just think about that, maybe he has a year to go. I think people are going to be looking very carefully at what he does this fall and how quickly he can turn things around. And I think it was kind of a genius stroke to be able to get this guy. I mean, he is a really successful CEO, turned around Chipotle, Taco Bell before that. And I think he's the kind of guy who actually could get something done. The question is, what will he do and how will he do it? And will Howard Schultz stay on the sidelines and leave him alone and let him do his job?
When Brian Niccol joined Chipotle, there was a tangible problem that he had to tackle and that he was able to tackle, and that was the foodborne illness issue. And he was able to fix that. I'm not saying that that's the only reason why he succeeded, but in the beginning, he was able to have a big win, which sort of set the stage for the rest of his CEO tenure. And I'm wondering, because this problem at Starbucks is one that sort of a lot of industries, whether it be a Nike or an Estee Lauder, we had a retail analyst on discussing this, multinational company running up against challenges in China, running up against challenges in the domestic market where they had the dominant market share. These are sort of a more amorphous problems for him to tackle. Do you think that the expectation for him to succeed is maybe too high at this point?
Yeah, I'm sure the expectations are too high because this company has lots and lots of problems, as we know, including labor issues, the depersonalization of the brand, the move away from that kind of folksy Starbucks that we all knew way back when. How do you reinvent yourself is a totally different question than how do you fix technology or how do you get rid of foodborne illnesses. And I think he really needs to come up with a strategy that will take Starbucks to a new place that it hasn't been for quite a while. That's going to be a tall order for him.
Yeah. Do you see similarities out there as the retail analysts we had on earlier sees in terms of some of the issues that larger multinational companies are now facing? Is there a sort of a common thread? Are you looking at this from a case perspective in terms of, what is going on with these storied brands that had been the dominant market share owner losing all of a sudden their dominance?
Well, I think, you can't last forever. And I think this is something that all organizations face. I mean, I've been studying companies for 4 decades. At some point, they lose their luster and they need to reinvent themselves.
And that is definitely true about Starbucks. All right. Can Palantir get to that $31 range now? $30.96, bro. Let's see if we can get there. Let me see if we still have. So on Robinhood, we still have 12,000 shares at 19. On Palantir, dude, we're really close. We're like 3 cents away. There's still 20,000 shares, so we still need about 600 grand to clear this. And maybe we get there. Maybe we get there to 31. Let's see. 30.99, dude. There it is. Someone has to buy 31,000 shares. If we can get someone to buy those. Oh, there we go. It's done. Look at that. Sliced right through it. Dude, that was smoother than my Amazon Prime joke, dude. There you go. There you freaking go. 31.02. Now can we just hold 31? Can we just fucking hold 31, bro? Can we hold it? This is the 3rd time we're retesting it, bro. Let's see. The Amazon Prime joke was smooth, though. You can't lie. It was fucking smooth, dude. It was corny, but it was smooth. It was absolutely corny, but it was smooth. 31.01. 31. There's plenty of shares ready to get sold off at 31.02, but each time should be easier. Yeah, it should be because it means there's more buyers that are coming in. Like the bid just keeps increasing. What's the latest on Palantir getting to S&P 500? So we'll know by September 6th. So we have about a month left. Less than a month, actually. And we'll find out. So, guys, part of the reason we might be running is because the street knows that we're going to get into the S&P. Right? I mean, I still don't think it's going to happen because the institutional ownership is low. And I don't know if the S&P committee is ready to deal with that. But if you think about it, we're on a pretty good run. And what happens before you get into the S&P? You go on a run. Like Tesla went up 40% before they got into the S&P. They fell after that. It's kind of like a sell the news, but maybe that's the reason why we're going up. I mean, if they let Lululemon and CrowdStrike in, now CrowdStrike deserved it until everything happened, but Lululemon, I don't I mean, dude, is Lululemon a S&P 500? Is it a top 500 company in the United States? Lululemon. S&P just went green, by the way. Robin at 1883. I don't know. But Lululemon deserves to be in the S&P over Palantir. And I know you can't do those like blanket comparisons, but still doesn't feel like, retail overpriced sweaters deserves to be there over Palantir. Someone says, did I just rob the market or say bye-bye to my Palantir? I sold 9 covered call contracts for 12.18 for over 6K. What is the strike on those covered calls? I imagine the strike would have to be like $30, right? If you got $6,000, you probably are doing some aggressive covered calls, like 31, 32. Well, if we tank and we go below 30, then yeah, you rob the market. You're gonna make a lot of money on those covered calls. If not, you will still make money, but your shares might get called away. 45, dude. What? There's no way. Hold on, really? Palantir 45 covered call. You said December 2020 or 2024. $45 covered call is paying 91 cents. You sold 9 of those. There's no way you made $6,000 on that. You made $600. No, you made $900. 9 contracts times 91 cents is about $1,000. If I'm not doing this wrong. Yeah, it's $819. So I don't know where you're getting the 6,000 from, unless you mistyped on that. But yeah, the $45 covered call is very safe. That's not aggressive. Now, if you did like the $30 call, if you did the $30 cover call, you would get paid 485 times 9. That would give you $4,000. December. Yeah, I'm looking at December 20th. December 20th is paying you for a $45 covered call, $1 of premium, which is good, but it's not $6,000 good. Now, if you did December 2026 at $45, then you got paid 745 times 9. Oh, that's how. So if you did December 2026, that's how you made it. Yep, I think you did. Yep, 12.18 because you wrote 12.18. Yeah. So so you are betting Palantir will not be above $45 by December 2026. That makes a difference between December 2024. And right now that's paying $745 a contract. So if you sold 9 of them, you made $6,700. I mean, look, I don't hate that. I do think by December 2026, Palantir has a shot of being above 45. I think that's possible, but I don't hate that covered call. But in general, Palantir 39.9. I mean, dude, if we really start scaling and ramping up, I don't know, man. I think 2026 is not horrible. Or I think $45 is not horrible by 2026. Isn't it better if we stay out of the S&P? If it'll be added, it'll just shoot up and then it'll calm down. Yeah, I mean, I think Palantir could come down after the S&P inclusion just because it's like people are going to take profits, dude. And it's up at that point, it'll be up almost 90% year to date. So if we fall later in the year, it's not going to be a surprise because, 25, I think, is a really healthy price for us to be at. Now, it would suck if it goes from 31 to 25, and I don't think it needs to, but I don't think we can necessarily complain. But any sell-off, as long as it doesn't go back to 20, we're still going to be up 50% year to date. And a lot of other stocks, it's been a stock picker's market. A lot of stocks can't say that. And the reason they can't say that is because their stocks haven't done that well, right? So I still think it'll be good. NVIDIA at 116, Microsoft at 415, Apple at 222, Lyft at 1012. Palantir still holding 31 now, up 2%. It'll probably take a few hours to see if this can maintain 31 because this is very wobbly back and forth. But let's see if we can get there. Let's look at Google puts and the premiums on selling puts. I mean, let's see, dude. Google premiums aren't always the best. So Google, it's at 158. If I sell a put for September 20th, let's do, the premiums. I mean, it's not worth that much, dude. Like for $145, which is $14,500 in collateral, you're getting 135. That's a 0.9% return in more than a month, which is okay. But I mean, I feel like 2% in a month is not crazy to ask out of a company like Google. Granted, the volatility on Google is much worse, right? The odds that Google is to 145 in a month is probably low unless we have a massive pull down again in September. And at that point, I mean, owning Google at 145 is not scary at all. There's 11,000 of those open. So I guess the premium is risk adjusted, but it's not the most exciting premium in the context of Google. Palantir at 3106. So again, still holding 31, which is not bad. Apple 222, Lyft at 1012, Robin at 1885, and the Nasdaq here at 462. We're holding 31, man. It's still going to take some time, but I think we're like beginning to actually hold 31 today. But let's see. We got a long day to go, and we'll see how it plays out. Amit, I know you don't like Disney right now, but I actually think there might be some upside to look at. I just don't get anything about Disney. I don't see any long-term thesis to be excited for Disney. And I know a lot of people do, but at 85, is it kind of cheap? Sure. I'll give you that. Price of sales of 1.7. I will PE of 18. I will definitely give you it's cheap. It's just I would get in Disney for an investment, not for a trade, because I don't understand Disney enough to trade it. So I would have to understand it enough to like own it for a bit, or at least be comfortable owning it. I don't believe in Disney Plus. I don't believe in the parks. I don't know if the brand is that relevant. I know the movie did $1 billion in box office sales, but that's like what, one movie out of a lot that have failed over the past 2 years. I just really don't like. I would rather buy Netflix, dude, at 600. At least I know I'm getting growth. And I don't like Netflix either, because I think it's kind of insane to pay $283 billion for a media company that's acting as if it's a tech company. It is a tech company, but it's essentially a media company. All the costs are similar to a media company, but they're doing it profitably. Disney is not. Now, granted, I think Disney probably does well from 85 just because it's very oversold on not only on the RSI, but also on the 2-year chart. But I just don't like it. Also, Bob Iger said he's leaving in 2026. So who's going to replace him? Because last time they replaced him, that did not go well with Bob Chapek or whatever. So if Iger is out, I'm definitely not excited about it. CPI was at 2.9%, correct? CPI was at 2.9%. Alien Romulus is coming out today. Amit, are you going to be seeing it? No. What is Alien Romulus? 2024 film? It's not by Disney though, right? Oh, 20th Century Studios. Does Disney own 20th Century? It might be by Disney. Alien Romulus. What is this? I've never heard of this. It's a successful Alien franchise. What the heck is Alien Romulus? No, I've never watched this. I've never seen this. I tried watching Jurassic Park the other day. I got so bored, bro. Like, I tried, guys. I really tried. I was bored, bro. Like, within the first 5, it was on Netflix. I pulled it up. I just got bored. Alien Romulus, August 16, 24. Sci-fi horror thriller takes the phenomenally successful Alien franchise back to its roots. Oh, so Alien was a franchise. So they're like remaking the franchise. No, I've never seen this shit, dude. I've never seen this shit. Never seen it. I'm sorry. I haven't seen it. I don't watch movies. I watch everything but movies and shows. So I'm sorry. I'm just not a big movie guy. I haven't gone to the theater since Oppenheimer, and I wasted my money going to Oppenheimer. Oppenheimer was so fucking lame, dude. Like, until we get another movie like Inception or Interstellar, there's just no reason for me to go back to the movies. Did you ever listen to Tool? No, I haven't listened to it yet. Dude. Every time I think of listening to music, I either like play like my hip hop songs or I listen to a podcast. Like I'm going to sit down and I will listen to Tool and I'll watch Lord of Rings and I'll do all these things that I need to do before I die. I'll make it happen. It's just going to take a little bit of time. Did you watch Barbie? No, I didn't watch Barbie. I didn't watch Barbie either. You kind of look like the alien a bit. Wow. That's nice. That's very nice. Thank you for that, Blake. All right, guys. I think that's it for me. Robinhood at 1892. Palantir still holding 31. We'll see how that plays out later throughout the day. But seeing some strong momentum, at least in that $31 range. And we'll see if that can continue. IMAX is going to have Interstellar. Interstellar's coming back to IMAX this year. Wow. That'll be fun. I would come back. I would go to theaters to watch that because I love Interstellar. I've seen it like 4 times, but I would actually want to watch that again. All right, word of the day, and then let's get out of here. Word of the day is we'll be back at 3:45, and we'll have Robinhood July metrics at 4:05 after the bell. Ambivalent. I was about to say ambivalent. Dude, I swear to God, I was about to say ambivalent. I was about to say it, and like 500 of you would have left immediately, but I caught myself quick. So for anyone who says I'm like faking when I say the words wrong, I caught myself this time. If I really wanted to fake it, I would say ambivalent. I promise I could have faked it. I could have been like ambivalent, but I caught myself. I was like, no. I've heard this word before. It's ambivalent. It's not ambivalent. I've used this word before. This is a common word. Having mixed feelings about someone or something. His ambivalent feelings towards his hometown made it hard for him to decide whether to move back or stay in the city. I felt ambivalent about starting a new job. All right. That's a basic one. It's not ambivalent, but it's ambivalent. Cool. Not bad. What'd you eat in the morning? I had no breakfast. I'm actually got to go to the gym and then I'll get some lunch. And then we'll be back at 3:45. Amit, one question right now. If Capital One saving account is paying 4.24% APY when the Fed cuts 50 basis points, do you think they can keep that rate? Probably not. All of the high yield savings accounts are going to lower their rates. And that's just inevitably what's going to happen. But that's good for the market because if you're not getting 4.2% or 5% from Robinhood, you're going to take that money and probably put it into stocks that are yielding higher, right? That's the entire thesis behind the rate cut. So I don't think any of the high yield savings accounts are going to be able to keep the rates, maybe for a little bit. But once the rate cut goes into effect, even on 25 bips, I think they're going to start lowering it because they can't justify it. And that'll probably help the markets over the long term as well. All right, cool. Palantir breaking out a little bit, 31.12. Let's see what happens when I come back at 3:45. And if we can hold this level, 31.14. There you go. Now you're getting some momentum, up 2.4%. Robinhood at 18.91. Palantir at 31.14. Let's see if we can keep that momentum and see where it goes at 3:45. All right, that's it for me. I'll see you guys at 3:45. We'll be back. We'll watch the new Vlad podcast at 5. We'll get the metrics at 4, and we'll see how the market turns out in the next few hours and keep going from there. I'm ambivalent about your usage of hay in the needle stack. I didn't say that. You guys said that, and you guys made fun of Tannor by calling him a hay in the needle stack. Again, I think you guys need to check your sources. It's a needle in the haystack. So I don't know why that mistake was made by you guys, but hopefully I can correct you in the future. Michael says, my wife says we're taking you out for Mexican when you come to Houston. All right, I'm taking you up on that offer. When I'm in Houston, we're definitely getting some Mexican. Thank you, everybody. I'll see you in a few hours, and we'll see Robinhood's numbers after the bell. Bye, everyone. Have a good one.